Hi folks, I'm Hector Garcia, CPA and Advanced QuickBooks Pro Advisor. And in this video, which is almost 4 hours long, I'm releasing day one. It's 8 sections, but it's day one of a multi-part QuickBooks desktop training series that I have. This actually mimics a full day of training that I used to teach in live environments in my office here in Miami. And now I have this recorded so you can watch them in my virtual courses. This is actually part of the paid course that I'm releasing into YouTube. So if you want to learn more, you can click on the link that's in the description and you can access the intermediate section of this course, day 2, that actually helps you get even certified as a QuickBooks desktop certified user and gives you access to the construction accounting mini course for people that have businesses in construction or contracting. I also have my super advanced series on manufacturing and inventory, which is for companies that are, of course, manufacturing, wholesale, e-commerce, that need to learn how to track their inventory in QuickBooks. So those are available. I'll put a link in the description to that. Because I am releasing an entire piece of a paid program, this video might not be in YouTube for long. So make sure that you bookmark this page, and I'm pretty sure that because it's 4 hours long, you go back and watch this over the next couple of days. That's okay. In the description, I'm also going to put the links of the sections if you want to skip straight to the sections, if you don't happen to be able to watch the entire video in one sitting. YouTube is probably going to run ads on this video because of the length of it, so just be patient. I'm pretty sure the video will be worth its while. The other important thing I want to say about this video is the fact that I mentioned quite a bit something called the QuickBooks Missing Manual 2016. And the reason why that's an old number, it sounds like an old number, is because 2016 was the last year that Intuit QuickBooks released a free manual to the public. It's actually an 800-page manual available in PDF, available for free. I will put a link in the description to that as well. So if you're going to follow along, maybe in 2 screens, and also have the printed manual or the PDF version of the manual, you can use that. I know you're probably using a newer version than QuickBooks 2016. The good news is that in the world of QuickBooks Desktop, 2016, 17, 18, 19, 20, 21, 22, and probably 23, they all look exactly the same. And every single piece of this course is 100% relevant today. As a matter of fact, for the people that purchase the course on my website, every time there's a new change, I add more videos or more content, basically talking to those changes so you can be up to date for that. But I guarantee you that this video will be really, really valuable unto itself. So again, even though the video was recorded a couple years ago and I referred to the QuickBooks Desktop Missing Manual 2016, if you have any version from 2013 even, all the way to 2022 and probably 2023 if they don't make that change that's not released by the time I'm posting this video, I guarantee you the video will be 100% relevant and you deliver tons of value from it. Anyway, let's get started. So right now I have my QuickBooks desktop open. This will be on a Windows machine. I'm working on QuickBooks Enterprise Edition. However, this training will work with QuickBooks Pro, QuickBooks Premier, QuickBooks Accountant, QuickBooks Enterprise, any version of QuickBooks that gets installed into a Windows machine, it would work in here. So when you first open QuickBooks, you're going to see no company open. That basically says that QuickBooks is open, but no database or company file. It's open. You're going to see multiple company files here if you happen to be managing multiple companies through QuickBooks. It may also look completely blank if you're opening QuickBooks for the first time. So we're going to create a new company. To create a new company, we're going to click here where it says Create New Company, and we'll just go ahead and click on that. Then it's going to give us a couple of choices. The big blue button says Express Start. And if you press that, I will show you that real quick. If you press that, it's going to ask you a few questions: company name, industry, business type, and basically let you move forward. However, if you're starting QuickBooks for the very first time, I recommend that you actually use the Detail Start. The reason for that is because the Detail Start or the Advanced Setup is going to ask you a set of multiple questions. And these questions are going to guide you step by step on how you should set up QuickBooks to match your particular business, your particular industry. So let's go ahead and set up a company name here. So we're going to call this Miami Computers. So we're going to go ahead and set up like a computer company, and we'll put a generic address here. And the idea behind just putting something here, this is just kind of a basic training, is so we can actually see that address when we create invoices. We should be able to see an address there, so make it look as real as possible. Now you can skip tax ID or skip phone number, email, website. You don't need that, but you could go ahead and put it if you're setting up a real company. Then the next question is what industry. Now, this is not extremely important. If you get this wrong, it's not such a big deal. However, QuickBooks is going to customize your chart of accounts and the type of transactions that you work with based on your industry. Now, we're working with a company called Miami Computers. This is the sample company we're setting up for this training. And we're going to find an industry that matches this one the best. So, for example, there's this industry here called information technology. That makes sense. It's a computer company, so we're going to go ahead and pick that. Now, one important tip is if you can't find your industry here, because it is a pretty short list, just scroll all the way down and pick one of the generic ones. There's a general product-based, there's a general service-based. You can pick either one. You'll be fine with that. For our particular example, we're going to go ahead and pick information technology. Again, if you can't find your industry, pick one of the general ones. The next question is, how is your company organized? This is kind of a tax question. So how does your company file tax returns? And you're going to go ahead and pick whether it's a sole proprietorship, a partnership, LLC, corporation, etc. If you don't know this, you should ask your accountant. If your accountant doesn't know this, you should change accountants or ask a lawyer or whoever helped you set up the business. So I'm going to go ahead and pick S corporation, which is tends to be one of the most typical ones here for a small company. So I'm going to pick S corporation and click next. Then it's asking me for fiscal year. So if you're a regular calendar year company where you start January and December and you file your corporate tax returns on March 15, like all other corporations, or most corporations rather, you're going to leave January there. But if you happen to close your year, let's say June 30th, if that's when you actually close your year, then you're going to pick my fiscal year starts July. Okay, that's what you would pick. But most companies are going to be January to December, so we're going to pick the start month. So we'll click January and then click next. Then I'll ask you to create an administrative password. It's good for you to have a password in there. So I'm going to go ahead and put a password in there. And if you are setting up the company for the first time, hopefully you are the admin. If not, we're going to have to figure out who the admin is and then create a separate user for yourself. Next question is asking you, where in the computer would you like to save this? Now, if you're working in a multi-user environment where we have a server, multiple computers, that sort of thing, maybe you want to get your IT person involved, just because if you save it in the wrong place, it may not work properly in a multi-user network server environment. And also, if you're not in that environment, but this is set up in maybe your own laptop, don't put it in the desktop, because typically in the desktop, you'll be sort of inclined to put it in the trash can or something like that. So put it in a folder where it just makes sense to put it. I'm going to go ahead and put it in, let's say, my documents folder, and I'll put it under Intuit, and I'll put it right there and hit save. Again, you should probably get your IT person involved if you need to really decide what the right place to put this in. When it's finished saving, it's going to say, all right, we're going to go ahead and customize QuickBooks to fit your needs. And it's going to ask you a whole series of questions about what type of company you have and the type of transactions you'll be working with. So I'm going to go ahead and click on next. First question is, what do you sell? Products, services, or both? So if you do sell products, inventory, parts, actual things that you're selling and exchanging for money, you want to pick products. If you do mostly services done by your employees or services of renting equipment or renting your facilities, labor, that sort of thing, we're going to pick services. And if you do both, just go ahead and pick both. And we'll click next. Then it's asking, do you charge sales tax? Again, if you sell products,
you probably charge sales tax. You may want to ask an accountant, see if the type of products you're selling are taxable, or the clients you're selling to, you need to charge sales tax. So you may want to ask your accountant. I'm going to pick yes there and then hit next. Then it says, do you create estimates? So if you want to give somebody a quote, a proposal, basically like a pre-invoice, very organized with a total, then you want to pick yes there for estimates, and we'll hit next. Then it says, do you track customer orders? Now, for our sort of first couple of videos, we're not going to be doing sales orders. So I'm going to go ahead and click no. However, if you are working with QuickBooks Premier, Accountant, or Enterprise, and you have inventory and you take orders for things you don't have in stock yet, and you want to take that order and then sort of remind you and have a mechanism to go order the product through your vendor, that's what a sales order will be. And then in that case, you would hit yes. But for the first couple of videos I'm going to have here, the first couple of lessons, we're not going to do sales orders. So I'm going to pick no. I'll hit next. Then it says, do you use billing statements? Basically, do you want to give a client a statement, monthly, quarterly, that shows all the payments, all the invoices? It's like an invoice of invoices. Okay, so it doesn't contain details of the products and services you're selling. It contains all your invoices and all your payments. So if you want that, you would hit yes and then hit next. Do you use progress invoicing? Now, I'm going to hit no, because on this example, company called Miami Computers, we're not going to do a project-based billing or milestone-based billing. However, if you are in the construction industry, if you sell projects that are sort of long-term, if your contract says, the whole thing's $100,000, and if you meet condition A, B, and C, you can bill your first 25%. And then if you meet condition C, D, and F, then you can bill another 30%. That sort of billing is called progress invoicing. So if you need that, you would hit yes there. But for the exercises we're going to do, we're going to hit no, and then we'll hit next. Then it says, do you manage the bills you owe? In other words, do you want to track accounts payable? Do you want to put vendor bills that you want to pay later, set them in QuickBooks now, recognize the expense now, pay them later, track how much money you owe in the future? That would be a bill. So I'm going to hit yes, because I like that feature very much. We'll hit next. Then it says, do you track inventory? Again, if you purchase product, you stock it, you put it in the warehouse, you maintain it, you make sure that it doesn't break, you make sure you don't lose it, you count it, you adjust inventory if the counts are missing, then you do track inventory. If everything you buy, you resell, but you never stock in your warehouse, it's all basically order on demand. If it's sort of small materials that you don't account for, you do charge the client for them more or less, but not item by item, just sort of in a lump sum, then possibly you don't track inventory. For our example, this company called Miami Computers, we are going to use inventory, so we're going to hit next. Then we'll hit yes, and then we'll click next. Then it says, do you track time? So that's only if I'm going to have timesheets, and those timesheets are going to be used to understand how much our employees' time is worth in each project. Or maybe I want to generate a paycheck with it. Or maybe I just want to bill my client the hours that I spent on the project. So if any of those apply, you're going to hit yes. For our couple of examples on this first videos, we're not going to track time. We're going to have a whole video on payroll, and we'll include all the time elements in there. So for this example, we're going to hit no, and then I'll hit next. Then it says, do you have employees? Again, we'll have an entire video series on payroll. But for this company called Miami Computers, we're going to go ahead and just have subcontractors. So we're going to hit yes on 1099 subcontractors, but we're not going to hit yes on W-2 employees. And then we'll hit next. Then it says, okay, we're going to set up your chart of accounts. But before we get there, I need to know what your start date is. And we'll talk about that in a second. And then after we settle the whole concept of start date, then it's going to suggest a couple of income and expense accounts. So I'm going to go ahead and hit next. And the question essentially is, do you want to start your accounting at the beginning of this fiscal year? Like, for example, let's say you're in the middle of July and you're setting up your QuickBooks file, and you're trying to decide whether or not you should go all the way to the beginning of the year. That way, when you close out the year, you sort of have a clean year so you can file a tax return. And that's very, very common. But you don't have to. If you want to just start your accounting today, August 1st, 2016, and forget about January through July and not really worry too much about the history of the mid-year, then you can just pick whatever date you want. Keep in mind, whatever your start date is, you're probably going to have to bring all the beginning balances right as of that date. Beginning bank balances, beginning credit card balances, loans, and we'll talk about that when we talk about the chart of accounts. So I'm going to go ahead and pick beginning of the fiscal year because that's the most common, especially for companies that already been open before we started our QuickBooks file. All right, we're going to go ahead and click next. Then it's going to suggest accounts based on the categories based on the options and questions that it asks. And these are the categories. So we're going to see all the different options here. I can turn them on by hitting the checkbox. So I'm going to go ahead and turn on subcontractor expense. I'll turn on business license and permits. I'm going to leave charity contributions out. Let's say I'm never going to deal with that. Let's say equipment rental, we'll turn that one on. And then we'll scroll down. And then we see that insurance expense, it's already suggesting a couple of other insurances. And you see a little gap or a little sort of tab there under that. That means these are sub-accounts. So this is suggesting a major category called insurance expense, but then it's additionally suggesting other subcategories or sub-accounts. So I'm going to pick general liability and health insurance as the two sub-accounts. And you're going to see kind of how those look in the chart of accounts briefly on the next lesson. I'm going to keep scrolling down and let me turn on janitorial expense and miscellaneous expense. I'll leave that one out. I hate that account. I find that when somebody has the miscellaneous expense account there, that becomes basically the go-to account for everything. So I typically suggest my clients to leave that one out. I'll turn on postage and delivery. That one's good. Scroll down. Repairs and maintenance. That's pretty good. We'll turn that one on. Property taxes. Let's say they don't have any buildings, so we'll leave that out of the options there. And you see a bunch of options there. Ask my accountant, really good. Leave that one on. That way, if you're an accountant and you're setting this up for a client, then the client knows to put everything they don't know there. And if you're an end user, and hopefully you have an accountant, and the things you don't know, put them there. That way, once a month or once a quarter, however often you meet with your accountant, you can review the transactions that went in that category. Okay, so once we're done reviewing these, we can hit next. And then it says, congratulations. You can click on go to setup. And the first screen you're going to see is this QuickBooks setup screen. Now, this screen only shows up when you first turn QuickBooks on and create a new file. So because I'm never going to get this screen back, I'm just going to hit close and we'll create customers, products, and bank accounts, but we'll do them in their own screens where they're supposed to be going. So I'll click on the little X there or click start working. Now, the first thing you'll see is the home screen. Okay, you're going to see the home screen there with a whole bunch of icons. We'll get to that in a second. And these icons have arrows going all over the place. And what really is happening here is QuickBooks is trying to, with each icon, represent a transaction. And each transaction is sort of an accounting event. And it's kind of walking you through the typical accounting events that you have. And we'll discuss those later on. Now, the other piece of big information you see, other than the icons there, is this big blue bar in the left. Now, this bar can be collapsed by clicking on that little arrow. And then you don't get that anymore. However, what's in here are shortcuts. Shortcuts, view balances. I mean, there's a couple of interesting things here. If you don't like this left navigation bar that you can collapse and open, you can just click on the view menu and you can just turn it off by clicking on left navigation bar. Or you can click on top navigation bar and see that same bar in the top, but it's going to be static, so you can't close it and open it. Now, a lot of people like to have these icons there just because they're pretty good shortcuts. However, everything you see on these icons can be also accessed through the menu. So if you don't want any of them at all, just click on hide icon bar and then you won't see a top bar or a left icon bar. I like having at least one, either a top bar or a left icon bar. But if you are going to have the left icon bar, just have it collapsed and in the shortcuts just in case I want to click my shortcuts and have access to the shortcuts there. Now, the other obvious sort of thing here is this little tab here called Insights. When you click on Insights, it's going to show you sort of a graphical interface, which is sort of a dashboard of my sales, my expenses, and they're good to have. Although there's a whole reports menu and a whole dashboard menu, it's right there as a tab on the homepage. So just know that that's right there. And once we have more transactions, those are going to be pretty obvious there. The other thing is, if you've been using QuickBooks on older versions, typically you're used to having the top icon bar like this, and then having this thing called the open window list. So I'm going to kind of show you what that is. Some people actually prefer that. So basically, if you have multiple windows open, let's say I have a bill open, and I also have, and let me just go ahead and click on a purchase order. And let's say I also have a purchase order open, and also have an estimate open, and then also have an invoice open. So what ends up happening is you have all these windows, and they're kind of a mess because they're sort of behind each other, on top of each other. See that will make it very difficult to navigate. So this open window list here on the left, it makes it really easy because you can just quickly go to the window you want. So you can click enter bill, and then under this view, you can just click on the maximize button and just have it maximized. And then you don't have to worry about making it smaller or bigger, just because you're going to have the open window list here. So that's a really important navigation piece. Right before we get started with QuickBooks, it's important to know that that's there. Now, if you like the left icon bar, I'm going to click here, left icon bar, and you click on this little tiny icon here. Where is it? This one, open windows. It's going to be a little bit similar than that left navigation bar. If I expand it, you're going to see it here is a lot bigger. For some people, that's better because it's easier to read, but I think it takes a lot more real estate. But what's nice is that even while it's collapsed, and you see that big label that says open windows, I can click that and briefly open it and switch. See that? I can quickly switch across different windows. So I like that very much. Now, it's really important to know that the escape key in QuickBooks will close a window. So I don't have to go all the way to this little X here to close, although that's a way to close. So I'm going to click on that X that closes the window. Be careful not to hit the big X or the X all the way in the top. That will close QuickBooks altogether. Anyway, so I'm going to keep pressing escape, and then just keep closing the windows and showing the window that's right behind it. However, if you just want to close every single window all in one shot, just click on window, close all, and that will get rid of it and just get you into a completely gray and blank screen, which I like a lot. I like that very much. I'm going to go ahead and expand that navigation bar again. So these are sort of the most basic navigation tips of QuickBooks. It's important to kind of get accustomed to that before actually starting to create transactions. A couple other things, keyboard shortcuts. So if you click on any of these menus here, so I click on the edit menu, for example, you're going to see a button there called use register. So by seeing use register there, you see Control R next to it, or for example, find Control F next to it. So it's giving you sort of a hint of that you can use a keyboard shortcut. If I go to the list menu, for example, you see the chart of accounts has a Control A shortcut, but the item list does not. So there isn't a Control I or something that can get you to the item list. However, that I mentioned Control I actually gets you into an invoice. Now, don't despair if there's a transaction there that you would love to have a keyboard shortcut to, that you don't actually see the control letter next to it. You actually can access almost every, not every, but almost every function in QuickBooks using the Alt key. So for example, if I wanted to get to the item list, which has no keyboard shortcut with the control menu, I can actually follow. If you see under L, the L is highlighted or it's underlined, and then you see the I is underlined. Basically, that says that if I hit the Alt key and then I hit L first, that's going to open the list menu. And then if I hit I, it's going to open the item list. Okay, so that's kind of an interesting shortcut to know. Alt LI will open the item list. Just like, for example, if I wanted to open my vendor center, which doesn't have a control letter shortcut, customer center does. Control J gets me to the customer center. but the vendor center does not have one. But if I hit O and then V, so Alt OV opens up the vendor center. So it's another really kind of interesting shortcut to know. Hit escape, close all windows. All right, that's the first lesson, setting up a new QuickBooks file and basic navigation. This lesson is going to be all about setting up the chart of accounts. If you are using the QuickBooks 2016, the missing manual as a reference, the best chapter to use as a reference for this lesson would be chapter 3, setting up your chart of accounts. Anyway, let's go on to QuickBooks here. So first thing, what is the chart of accounts? The chart of accounts is the heart of your accounting system. This is where you're going to have all your categories or your financial categories that every single transaction is going to be organized into. So to access my chart of accounts, I'm going to go to the list menu and then click on chart of accounts, or I can just hit Control A on the keyboard. That's the keyboard shortcut, Control A. Just another common place where we access the chart of accounts, it's in the home page. So if you happen to have the home page open, here under the company section, you're going to see an icon for chart of accounts. So there's a couple of ways to access it. Now I'm going to go ahead and maximize the chart of accounts. That way I'm sort of, it'll be the only thing that I'm seeing here. And a couple of things to observe. So the chart of accounts has two major type of account categories. One are the balance sheet accounts. These are the ones that appear in the financial statement called the balance sheet. And the other one are the profit and loss accounts, or the income statement accounts, which are the accounts that show up in the financial report called the profit and loss. Now, the way you know which ones are which is all the balance sheets are organized first. And the minute that the last account that has a running balance, so you see that 0 there with a running balance. So the last account that has a running balance will actually be the last balance sheet account. And then you're going to see the first one right under it that does not have a running balance, even if it's 0, that would be the first of the profit and loss account. So right here, when you see the equity account type end and the income account type beginning, that's where you should see sort of a virtual separation to know, the top ones are balance sheet and the bottom ones are profit and loss. Anyway, let's go ahead and start creating some accounts from here. So one of the most commonly used accounts in the chart of accounts, more specifically the balance sheet accounts, it's going to be your bank account. So to create a new bank account, we're going to right click and click on new, or you can also click on the account button here at the bottom and click new, or you can hit Control N. So you got basically 3 ways to create a new account. I like right clicking. I think it's the easiest one to remember. So you can right click and click on new, and it really doesn't matter where you're right clicking. So I can right click on the number here or right click down here. It's all going to be the same effect. We'll click new. So on the new account screen, you're going to see income and expense as the first 2 categories there. And these are having to do with the profit and loss. These are the categories, the types of accounts that I mentioned earlier. Income and expense are profit and loss categories. You can also see other profit and loss categories here under cost of goods sold, other income, other expense, here tucked in under other account types. Now these here are balance sheet accounts. So we have fixed assets, bank, loan, credit card, and then in here under other account types, you can see accounts receivable, other asset, other current asset, other asset, accounts payable, other current liability, and long-term liability. These are all part of the balance sheet as well, along with equity. So later on down the road, we'll discuss the accounting effects and what all these things mean. But let's go ahead and get started with creating a new bank account. So I'm going to go ahead and click on bank and then hit continue. And then the first thing we'll ask you is for the account name. And now a lot of people put the company name there. That's actually not the best use of that account name. In here, we want to use something that lets you identify the bank account easily, especially if you're working with multiple bank accounts. So let's say, for example, I have one bank account in Chase and one bank account in Wells Fargo. If that was the case, I can call one Chase, call one Wells Fargo in QuickBooks, and that will make tons of sense. But let's say, for example, I have 3 accounts in Wells Fargo, and 2 are checking, 1 is savings. Maybe I want to be more explicit the way I call these accounts. So I'm going to call this one Wells Fargo. Maybe I put the word checking and then the last 4 digits of the account. Okay, that could be a good use for that. And then when I do the second checking account, same thing, Wells Fargo checking, last 4 digits. Some people have one account just for writing checks, one just for running payroll, and they want to call it the operating account or the payroll account. You're welcome to do that as well. Anyway, so because we were setting up our QuickBooks file in 2016, starting January 1st, 2016, it is likely that we have an opening balance in that bank account starting the beginning of the year, which is pretty much a balance that came from last year. And because I'm setting up QuickBooks for the first time, and there was in fact activity or there was accounting before we started this fiscal year, I have to put every single balance sheet account that I create, I have to put the opening balance. So I'm going to go ahead and click opening balance. I'm going to grab the actual bank statement. So I'm going to grab the actual bank statement that I have from Wells Fargo dated 12/31/2015, which is the day before the start date of this company file. And I'm actually going to read the ending balance from that statement, and I'm going to type it in here. So let's say, for example, the ending balance is $10,560 with 60 cents. So I basically just wrote that in there, and that was coming from the physical bank statement on the closing date of the previous year before we started QuickBooks. And I'll type here 12/31/2015. Okay, so make sure I put there 12/31/2015. Perfect. And then I'll go ahead and hit OK. Now you're going to see a little preview of the opening balance and the date there. So I can, at this point, hit save and close. And you may get a warning saying, hey, you're creating a transaction that's more than 90 days in the past. Are you okay with that? I'm going to go ahead and hit yes because I know what I'm doing, or I'm doing this intentionally. So I'll hit yes. And then you're going to get this pop-up saying, hey, set up bank feeds. Connect your bank with your with QuickBooks so everything downloads and everything's faster and better, blah, blah, blah. Honestly, I love bank feeds. I love that feature. But unless you really know how to manage QuickBooks in a manual way, you shouldn't be connecting the bank. So I recommend that at the very beginning, when you're first getting started, you're going to hit no there. Okay, perfect. So you're going to see that bank account show up there. You're going to see that opening balance that we created. And you're immediately going to see another account that gets created called opening balance equity. Basically, QuickBooks is going to create an equity account to counterbalance that new asset that we're putting in there, because you can't just have assets come out of nowhere. They have to come from somewhere. And unless you're setting up QuickBooks file with an accountant or with somebody that understands this well enough to grab the balance sheet from last year or the tax return and plug all those numbers, you really don't know where these balancing amounts go. Now, generally, those amounts are actually part of your retained earnings, but I don't want to get too much into the accounting effect of that. So you could probably leave it in opening balance equity, no problem, and then allow your accountant to fix it at the end of the year or whatever. So let's do the other checking account. So I right click new, and then I'm going to go bank account and hit continue. And then we'll call this one Wells Fargo payroll account, and we'll put the last 4 digits of the account there. And also don't forget, you also may have to do an opening balance there. So I'm going to grab a statement from last year, and let's say the opening balance was 4,690.70. Again, I'm getting that from the bank statement, or I should, in theory, be getting that from the bank statement from the previous year. So I'll hit OK, and then I'll hit save and close. And then you'll notice how now I got my 2 assets, and you have the balances start going up, and you see that same opening balance equity account keeps increasing because you're entering these beginning balances. Let's do the savings account as well. So we said we had 3 accounts, so we'll put here Wells Fargo savings, and let's say the opening balance for that one was 20,000 flat. And I guess we just started with 20,000 and never really moved money around there. So 20,000 flat, 12/31/2015, hit OK, and then save and close. Perfect. So now we keep seeing that balance go up, 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 and up, and then our opening balance equity keeps going up. Now let's enter an an account that's liability in nature or something that we owe. So the perfect one to get started is our credit card. So let me go to account, new, and then I'll create a credit card now. And the same thing, I'm going to get my credit card statement from 12/31/2015 or the closest date, because credit cards don't really close cleanly like the way banks do. So you're going to get the closest thing to 12/31/2015. And then we're going to put here Amex and the last 5 digits. Typically with American Express, we do 5, not 4, but you can do 4, it's fine. Then we'll do opening balance. Enter opening balance, and then let's say the opening balance for this one was 47,690.30, and then the statement ending date, that's going to be the physical statement that I have that's closest to the last day of the year before we started QuickBooks. And let's say that one happens to be 12/25/2015. Perfect. And then I'll go ahead and hit OK, and then I'll hit save and close. And then this will say yes, and then no to connect online banking. Now notice that, yeah, we did have some assets here. We had some balances in our bank accounts that was creating a positive equity. However, now we entered a credit card, which is money that we owe. It's a liability, and that's making our equity negative. That's actually on purpose. That's intentional. That's the way QuickBooks kind of manages your assets and your liabilities and calculates your the value of your business. So let's enter a couple of more assets. Let's go ahead and enter a truck. So let me go to a new account, and then I'll do a fixed asset. And then we'll call this one GMC Astrovan, right? Whatever the name of the van is. And I'll put the year of the van, 2013. Okay. That's how we're going to identify it. So where it says enter opening balance, what you want to put here is the original cost of the asset, the original purchase price of the asset. We'll forget about depreciation for a minute. It's just the original cost of the asset. So let's say this van was 36,900. And as of at this point, you could put the original purchase date or just put 12/31/2015. It really doesn't matter which one you put. However, for some people, they prefer to just put be consistent and just put 12/31/2015. And then we'll go ahead and hit OK, and then save and close. Okay. Now I could enter the depreciation if I knew it, if I had the balance sheet in front of me. So if I wanted to enter that depreciation, I can create a new account and click on fixed asset and then hit continue. Again, by the way, at this point, if you have no clue what depreciation is and it's starting to get confusing because you really don't understand the concept of depreciation, don't put it. Wait to work with your accountant on this. But if you do know and understand the concepts, go ahead and create it. So we're going to create this one. We're going to do this one called accumulated depreciation. And let's say we actually had that number from our previous balance sheet. And let's say that accumulated depreciation. And I'm going to start with a negative number because depreciation decreases the value of the asset. So let's say it's 26,000. So we'll do 26,000 and then 12/31/2015, and then we'll hit OK, and then save and close. And let's just change it a little bit there. There we go. Now you're going to notice that we have our asset of 36,900 and our accumulated depreciation of negative 26,000. The actual current book value of that asset is going to be the value of the asset minus the depreciation. So we're going to notice that in our balance sheet a little bit later on as we enter that. Now let's say that we also have a loan on that van. So we didn't buy it cash, or maybe we put a down payment, whatever. So let's create the loan. So we'll go to new, and then we'll create this as a loan, and then we'll hit continue. And then we'll call this one GM Financial, right? We're going to get the actual statement from GM Financial. We're going to read the payoff balance or the principal balance as of 12/31/2015, and we're going to enter that in there. So we're going to go ahead and click on enter opening balance. And let's say we still owed 96,000, let's say 9,650 on the truck as of 12/31/2015. So we'll enter that liability. That's something that we still owe the bank. So I'll hit OK and then hit save and close. and hit yes. So you notice, all these numbers start appearing here, and we have this running balances appearing. If I actually go to reports, company financial, balance sheet standard, and we'll spend a lot more time on reports in another lesson, but this will start giving you a preview pretty much of what's going on. We see our total cash on hand is 35,000, or money in the bank. And then we have the net value of that vehicle is 10,900, which is the original purchase price minus the depreciation. We see our liabilities. We have our American Express for 47,000, our GM Financial, and then we see the running balance of our business, which happens to be negative at this point. So that kind of gives you an idea of what are the first steps that you have to do in the chart of accounts to create all your beginning balances. Let's go ahead and skip the balance sheet accounts, and let's go to the profit and loss account. So I'm going to scroll down here and take a look at our income category. So let's say, for example, we got consulting income, sales of hardware, sales of software, sales of support and maintenance, and shipping and delivery income. And at this point, you may go and say, there's another major income category that's missing. Our business also provides training. So let me make sure that I have an income category for training because I want to track that too. So we're going to right click and click new, and then we'll create a new income account here. I'll hit continue, and then we'll call this one training services. Perfect. And then notice that there's no opening balance option here because this is an income account. This is a profit and loss account. As I mentioned earlier, those accounts do not carry opening balances. Only the balance sheet accounts carry opening balances, so there's no opening balance to put. So I'll put save and close, and then I'm going to have my fifth income category there. So or my sixth income category. So now I got my income categories. Let's say I go through my cost of goods sold categories, and those are all good. Let's say, for example, this one called subcontracted services. Let's say the only thing we subcontract is other trainers. Just to give you an example. So we're going to right click on that and hit edit, and then we'll change that to subcontracted trainers. Maybe it makes a lot of sense to just have very specific wording in our accounts like that. So let's say, for example, that we do pay some outside trainers to do some of the training that we offer to our clients. So we're going to have that account there. Okay, so let's scroll down a little bit more. And we'll take a look at insurance, and notice that we have general liability, health insurance, right? So there's my insurance category. Let's say, for example, we also take out a life insurance for all the executives. So let me go ahead and click on account new, and then we'll make this an expense category, and we'll hit continue. And then we'll put here life insurance for key persons. Okay, that's actually a typical name that we give when the company pays life insurance for the CEO, for example. So we'll make that a sub account. We have to make sure that we actually click on the little checkbox and make that a sub account of insurance expense. That way, this becomes a sub account of insurance expense, just like the other sub accounts are there. So when I hit save and close, there will be my three sub accounts there. Now, another category that typically gets sub accounts, it's automobile expense. For some reason, people love to break out automobile expense. So let's do a couple of examples here. I'm going to go ahead and click new, and then I'll click on expense, and then we'll hit continue. And then I'll do a sub account called fuel. So basically, every time I go to the gas station, I'm going to use that one. And I'll make that a sub account of automobile expense. Perfect. And then because I'm going to be creating a whole bunch of accounts here, I won't do save and close. I'll just do save and new. Just make it faster for me. Save and new, and I'll do the next one. Let's say I'm doing parking and tolls. Yeah, and I should definitely make that at least the first letter capital. Make that sub account of automobile expense, and you start noticing how you got fuel under there too. Now, don't make it a sub account of fuel, obviously. Just make it a sub account of automobile expense. And then we'll hit new. Let's say we also lease our vehicle. So we'll put here the lease payment of company vehicle. And you don't have to make this accounts really long. That's only if you want to. Put here company car. Okay, let's say this is different than the van. The van was financed, but let's say it's also a company car that we're leasing. So we'll go ahead and put that one. and then we'll do save and new. Let's do repairs and maintenance for the car. So let's just call it auto maintenance. Perfect. Maintenance, okay. And we'll make that a sub account of automobile expense as well. And then we'll do save and new, and let's do the last one. Let's do auto insurance. Okay, that way we can track all of our auto expenses under this category called automobile expense, instead of putting the auto insurance under insurance expense, which you could do. You can do either or, but let's say I wanted to do that. So I'm gonna go ahead and hit save and close. And there it is. So I got automobile expense has multiple sub-accounts, and insurance expense has multiple sub-accounts. Another one that gets, for some reason, a lot of sub-accounts is travel. People like to break out lodging, travel, meals, that sort of thing. So let's do that as an exercise as well. So we'll do lodging, which basically means hotels. Okay, so we'll do lodging, sub-account of travel. Okay, and then we'll also do airfare, right? So that's when pay for plane tickets, maybe pay for extra baggage or whatever. That's all going to be here as a sub-account of travel. And let's also do transportation. So transportation could be taxi, Uber, train, subway, even rental car that can go there. So if you actually wanted to sort of remind yourself what this is for, just put it on the description. You can put there taxi, subway, train, same thing, right? Let's do rental car, Uber, whatever. Okay, bus, it could be many ones. So if you wanted to put in the description, just sort of like a little cheat sheet for you to use, you can do that, no problem. And then let's see, save and new, and let's do miscellaneous travel. I always like to create sort of a miscellaneous category under parent categories. That way we are not tempted to use that actual parent category. So miscellaneous travel. Oh yeah, I forgot, really important one, travel meals. So let's do here travel meals, or meals while traveling, whatever you want. That's really important because there is an account called meals and entertainment, but that's more for local meals where you go entertain a client, take them out to eat, that sort of thing. But if you're traveling while eating, eating while traveling, it's really important that you track that separately, just because it has a different tax effect. All right, so I'm going to do save and close. So that's pretty much creating new accounts in a nutshell. The other really important thing is when you first set up QuickBooks, it gave you a whole bunch of options, and sometimes you want to go back and look at those options. So that's sort of there, kind of hidden. So if I right click and click on new, and then I'll click on expense, and then I'll hit continue, you're going to see a little button here that says select from examples. If I click on that, here's going to be all the categories that we didn't put a check mark on previously, like we left miscellaneous out, or we left printing out. So you can actually just double click on those and hit save and close, and it'll create those categories that we didn't select the last time. All right, so that's creating accounts, renaming accounts, and creating sub-accounts. Let's talk about hiding accounts. So let's say, for example, that for whatever reason, this one here called postage and delivery, I'm not going to use anymore, and I want to hide it. So all I have to do is right click and click on make account inactive. That will hide it. It won't erase the history. It will hide it, and I don't have to deal with it anymore. Now, let's say I want to delete an account. Let's say janitorial expense. It's pretty much redundant to maybe repairs and maintenance, because I put all the office maintenance stuff there. So I can just right click on that and hit delete account, and I'll hit OK. And it let me do it because the account had no transactions, so that was okay. But if I try to delete, for example, my credit card account, which has a balance in there, so I'm going to go to Amex, right click and delete. QuickBooks won't let you. It says, listen, that account has at least one one transaction. Because it has one transaction, I cannot delete it, period. So you have two choices. You can either hit cancel, right, because it's just not going to work, or you can make it inactive, hide it. Now that hides the account, and that'll make some people freak out because it has a balance. So that won't go away for reports, even though that's hidden, it will still show up in the report. But if I ever wanted to show that account again that I hid or temporarily made inactive, I can hit this little checkbox here that says include inactive. Check on that, and then you're going to see the account show up, and you're going to see a little X next to it, which basically says or tells you that it's inactive. So all I have to do is right click on it and make active, or click on the X itself and I'll make it active. So it's showing again. Let me go ahead and make that active, inactive, hide that inactive again. Now let's also assume that I have accounts that are redundant. So for example, let's just pick one here under computer and internet expenses. Let's say that I have a transaction there that really, or I have a whole bunch of transactions that really pretty much is the same thing as office supplies. Okay, so let me show you an example that will just make sense. Let me open up the checking account here, and I'm going to enter two transactions that I paid, let's say, two different vendors that was essentially the same thing, but I ended up using two redundant accounts for that. So let's say, for example, I went to Office Depot. I'll make it that all caps, make it easier. And we'll discuss data entry on the register later on. I'm just kind of showing you what are the potential reasons why you would need to merge accounts. So let's say I went to Office Depot, spent $5 in office supplies, and let's say I bought paper, give you an example, and then I'll hit record. So there it is, I got $5 in Office Depot office supplies. And then let's say a couple of days before, I went to Office Max, right, same thing, and I basically bought, let's say, a cable for the computer that was $19. And for whatever reason, I had this account called computer and internet expenses, which makes me think that it's different somehow than office supplies. And on the memo, I'll put here cable. So what ends up happening is when I look at my financial statement, I'm going to go ahead and click on reports, company financial, profit and loss standard, and show you when I look at my financial statement, and definitely I'm going to have a lot more numbers there, but I end up having essentially what should be the same category, but because I was careless on setting up the chart of accounts, or I wasn't maybe thinking about the future, I ended up creating two redundant accounts, two accounts that are essentially the same, but they should be merged. So merging would be getting rid of these two as two separate entities. So the way you would do that is in your chart of accounts, we're going to look for the one that we don't want anymore. So let's say we don't want computer and internet expenses. So I'll right click on that and click on edit. And then I'll change the name of that account to match the one that I want to merge into. So I'll just type here office supplies. And it doesn't matter uppercase, lowercase. As a matter of fact, what matters is that this is spelled exactly and verbatim. So as long as that's spelled exactly and verbatim and I hit save and close, QuickBooks will say, hey, wait a second. You're naming this account a name that already exists. Do you want to merge them? So if I hit yes, it will merge them together as if no separate accounts ever existed. Or if I hit no, basically I abort the mission. But let's say I want that. So I'm going to hit save and close and then hit yes. And that effectively will merge the two accounts. You hear like a little picture sound. And if you go back into that profit and loss, you will notice that it no longer will show as two separate accounts. It shows just as one account, and you will lose the history of the two transactions being separate. But the way reports work in QuickBooks, I can double click and obviously still see the two separate transactions. Although at some point they used to go in different accounts. Now they've been merged into the one account called office supplies. So that in a nutshell is chart of accounts, creating accounts, deleting, renaming, merging, making inactive, and entering opening balances. On this lesson, we're going to be talking about items, creating items, manipulating items, working with items. If you are using the QuickBooks Missing Manual book as a reference guide, whether you have a physical book or a PDF, kind of like what I have here on the screen, what I recommend is you jump to chapter 5. So chapter 5 will be all about working with items. All right, so now that I'm in QuickBooks, before I jump to my item list, it is important to recognize that there's a tight connection between the item list and the chart of accounts. So I'm going to click on the list menu and click on chart of accounts real quick, just to kind of clarify what are the type of accounts that I have here. So notice I have a whole bunch of income accounts, a whole bunch of cost of goods sold accounts, and those are going to be really important when setting up items, particularly inventory items. So to open up the item list, we're going to click on the list menu. item list. You can also get to the item list if you happen to be on the home page like this by clicking on the items and services icon that is inside of this company area here. So if I click on items and services, that will take me to my item list, which is pretty much blank right now. Another really important thing, the shortcut to get to the item list, it's going to be Alt-L-I. So if I just hit Alt-L-I, that will take me straight into the item list. All right. So while I have the items up here, right now you're going to see a big blank screen. So we're going to create a couple of items. To create new items, we can right click, just click with the right mouse button, and we can click on new. That's one way we can approach it. The other way is we can click on the little item button down here in the bottom, click on item, and then go to new. So that's basically a second way of creating a new item, or we can just embrace the shortcut. So I can hit Control N. Okay. All three of those are going to render the same exact result, which is open up the new item window. Now this item window may look like this if it's maximized, or if the screen is not maximized, it may look like this, like sort of a detachable window. Either one, it will give you the same amount of options, whether it's a big screen like this or small window like that. Anyway, here in my item list, I have a couple of choices. Once I click on the type, I'm given the service option, inventory part, inventory assembly, non-inventory part, other charge, subtotal, group, discount, and payment. So let's go through all these in summary here. Now, inventory part and inventory assembly, that is only going to be available if the inventory option is turned on. So let me just hit cancel here for a second and show you where you would check that. So you click on the edit menu, click on preferences, and then here where it says items and inventory, we're going to go ahead and click on that, and then we'll click on company preferences. And then you have a little checkbox here that says purchase orders and inventory, and you can turn that on by clicking the checkbox on. If yours is not active, you're going to see everything grayed out under it, and you will not see a checkbox. So if you are not seeing inventory or purchase orders as an option, it's because a little checkbox is not on. Anyway, let's go back into the new item screen here. So we have a couple choices here. We have a service, inventory part, inventory assembly, non-inventory assembly, etc., etc. Let's start with service. Service is going to be the principal service you provide or you charge for: consulting fees, labor, installation, all those things. Inventory part is going to be for an item that you purchase, stock in the warehouse, track as inventory, and eventually sell. Inventory assembly would be if I have raw materials as inventory parts, and then I want to bundle them together into a single final product called inventory assembly and track my raw materials by themselves and my assembled products by themselves. Then I would use inventory assembly sort of in combination with inventory part. Non-inventory part would be an item that you want to track with a specific name, specific description, but you'd not necessarily need to track the individual quantities on hand. So if I want to buy and or sell specific products or materials that are going to have their own name and their own description, but I don't necessarily need to track how many I have in stock or how many do I have pending to stock, that sort of thing, then I would pick a non-inventory part. Now, other charge, that's going to be sort of a quasi-service. So other charge and service kind of have a similar purpose, but other charge is really meant for you to put the type of services that do not really encompass the main source of income that you have. So if you have sort of miscellaneous charges, accidental charges, like a delivery fee, a setup fee, a late fee, those sort of things you will put under other charge. And then in reports later on, you can discriminate whether or not you want to see services, other charges, or both. Now, subtotal is kind of an interesting one. Subtotal gives you the ability to create multiple items that their purpose is to calculate the total amount of every single item directly on top of it. So that's the purpose of subtotal. And subtotals are typically mostly used for applying a discount. Okay, so we'll discuss that later on. Now the group is similar to an assembly where it is a whole bunch of inventory parts put together. The difference is the group is sort of put together on the spot. It's not really, doesn't really go through a manufacturing process or an assembly process. So a group would be more of a bundle, like, I want to sell 4 tires all in one shot. So I would create a group with 4 tires in it. That's kind of what a group would be. So that's for me, selling things in group that I don't necessarily inventory or stock as an assembled product. Now discount is exactly what it means. It would be an item that would be a negative. So it will subtract from the total of the invoice. Or you can even calculate a percentage from the line immediately on top of it, or a subtotal. And payment would be a customer payment that would be built into the invoice, right? We could discuss that later on. Let's focus on the most important ones, which are going to be service, inventory part, and other charge. We'll talk about those 3. So let me start with service. So I'm going to create a couple of service items here that are representative of the services that we charge. So our company, let's say it's a computer company that does both installation and repair and selling of hardware and software. One of the main services we offer is hourly IT support. So I'm going to go ahead and create an item here called hourly IT support. Okay. Under description, I'll go ahead and be maybe a little bit more descriptive, like level 1 support of IT, no servers or security. Okay? And maybe because I want to have a level 2 type of service with a different rate, for example. So that's just a generic description that is subject to change on every single invoice or estimate. So don't feel worried that whatever you put there is set in stone. That's just sort of a default description. All right, so let's say the rate for this is $75. We'll start there with $75. And then most people would love to avoid this part, which is choosing the account. If you actually just hit OK, QuickBooks won't let you. It says, warning, you got to specify an account. Otherwise, the item is non-functional. That's why I said earlier that you have to kind of understand and appreciate your chart of accounts first before you can even think about working with items. And then it'll become much more obvious later on why we have the 2 as we start using them on transactions. Anyway, this is going to be hourly IT support. So hopefully I have an account here that matches that. So I got consulting income, sales, support and maintenance, sales of hardware. So I just got to basically pick that item, which income account it goes to, if I want to group them and create different income accounts. So I'm going to select sales, service, and maintenance, or sales, support, and maintenance. And by the way, it's important to point out that I have many clients in which in the chart of accounts, they just have one income account called sales, or one income account called income, or one income account called revenue. It's all the same thing. So this dynamic of having multiple income accounts is really just mostly useful for just creating much in-depth reports. Anyway, so that item is set up, and then I'll hit OK. That will take me back into my item list, which I'm going to make a little bit bigger to make it easier to read. And then I can sit there and resize these columns if I want to see things differently. If I wanted to change the order of any of these, I would have to right-click and go to Customize Columns. And then I would basically change the order. Let's say I want to put price as maybe the immediate attribute next to the name, and then hit OK. And then you're going to see price right there. So you can actually manipulate the way this screen looks. So if I wanted to create another item, let's say I'm going to do a level 2 hourly support, I can just right click new or Control N and then start typing away from scratch. Or if the item is extremely similar to the previous one I created, I can just right click on the current item. So right click with your mouse and then click on duplicate item. Same thing would be if I click on the item that I want to duplicate and then click on item and then click duplicate item. Right? There's no control key for the shortcut for that. So you're actually going to have to right click or find the function right there under that little item menu. So I'm going to go ahead and duplicate the item, which is basically going to bring every single attribute the same, which will help a lot. The only thing that you will notice is that the letters DUP, like duplicate, gets added right in front of the item name. So I can just delete that. And then I have to make sure that this item name is different than the other one, at least by one character. Otherwise, QuickBooks won't let me have two items with a similar name. So we'll call this one L2. That way we'll know it's a different item. And then on this one, on the description, I can put level 2 support of IT. And then I can put here, including servers or security work. Okay, so clearly separating two different items that we have at different prices. So we'll make this one, let's say 125. Whoops. Put that back here. So I'll put this one 125 and then we'll hit OK. Perfect. Now I got my two service items. So let's jump into creating a non-inventory part for a minute. So I'm going to right click and go to new. And then I'll make now a non-inventory part. And let's say, for example, that I buy and sell cables, let's say network cables, but I don't really track them as inventory. I do buy and sell them just to kind of put them in a purchase order so my vendor knows exactly what I want. So we'll call this one a Cat 6 10-foot cable, something like that, right? And then here in the description, I'll just put here network cable, and then let's say that we typically sell these for $10 a pop. Put $10 a pop there, and then on the account I'll put it under sales of hardware. I guess I could put it under support and maintenance because again, it's not really hardware sales, but I'll put it there just as if I want to track it. Now, if I also buy those cables, not just sell them, but I also buy those cables, I can click on this little checkbox, which basically says they are purchased for a specific customer or job. And then under cost, let's say I typically pay $3 a pop for these. So I'll put 3 there, and then under expense account, I'll put it under, let's see, if I have sales of hardware as my income account, then technically my expense account should be, let's look at my cost of goods sold, purchases of hardware. There we go. So I guess my chart of accounts has sales and cost of goods sold accounts that kind of match. I'll go ahead and copy this description over so it's not there descriptionless. All right, so I'll hit OK. And there's my non-inventory part, and we'll kind of show you the dynamic of that as we start doing purchases. Let me add one more item here. Let me do a new, and then I'll do an other charge, and then we're going to call this one delivery. Okay, on the description, I'll just type there delivery. The amount, I'll leave it blank because delivery is pretty much going to be different every single time. So under account, I'm going to put here an income account called shipping and delivery income. So this is basically us charging delivery to the client, to take stuff to the client. And again, if I'm going to use the same item to book my delivery cost to bring the products inside, bring it in once I order them, I also have to click on this little checkbox. That doesn't make a lot of sense there, but you just do it anyway. And then under expense account, we have to find an account that matches. So because this is the expense side, this is when I pay for delivery, then this one makes the most sense. Cost of goods sold, freight and shipping costs. There we go. So now that item is actually a double-sided item, so I can use it for purchases or sales. If I choose not to hit that checkbox, then I only wanted to use this item for selling, for invoices. But if I also want to use it for purchasing, I have to make sure that I turn that piece on right there. So I'm going to go ahead and hit OK. So there we go. We got two double-sided items, the non-inventory part and the delivery. All right, let's start setting up now some inventory parts. So let's say, for example, that we sell laptops and servers. So let's go ahead and create those. So I'm going to right-click, new. And then this time around, I'm going to hit inventory part. You will notice immediately that there's no like little weird checkbox asking me to expand or collapse the items to be double or single-sided. Automatically, because they're inventory part, you are forced to have an expense side and a sales side. All right. So let's say, for example, under item name, we're going to call this one Dell Laptop S 100. Let's say that's the item name that we're going to give it so our customers see that on the invoice. On the manufacturer's part number, that would be from my Dell catalog, exactly what the part number is called. So let's say this is called LPS 100-RTX, right? I'm making this up, but you would pull this exactly from your vendor's catalog list, okay? Then under purchase description, I guess you could, if you want to, you could copy and paste the part number there again if you wanted to have it there. And then maybe we can get into some of the technical specifications of what the laptop's going to have. So I can put here, 15-inch, we'll do XGA or whatever that means, right? Some technical specs. And then we'll have i5, dual core, etc., right? This is like the technical specifications of the laptop that I'm buying, and I'm letting know my vendor exactly what I'm looking for. Under cost, this is what I'm going to pay for the item. So let's say I pay $480. And then under cost of goods sold account, it's good to make sure that if you have multiple cost of goods sold accounts, to pick the right one. A generic account called cost of goods sold, just like a generic income account called sales, it's fine technically, but let's tie this all together. So I'm going to do purchases of hardware for resale. All right, perfect. Preferred vendor would be who I buy this from. So if I had a vendor list, which I don't have now, I should have a vendor there called Dell Corp or something like that. So now I can pick my preferred vendor. That way I know exactly who I buy these from. Now let's move on to the right side under sales description. Maybe I don't need to give my client all this. Maybe by giving my client all this in an estimate will cost them to Google it and circumvent us from the sale altogether. So if that's going to be the case, I will put here the description that I want my client to see. So maybe I will just put here fast laptop, right? Something simple like that. And then under sales price, let's say we sell these for $599. And then under income account, I'll click this little drop down box, and then we'll make this sales of hardware. There we go. So now my income account is it's an income category. My cost of goods sold account is a cost of goods sold category. That's what COGS means, cost of goods sold. I got my preferred vendor. I have my cost, what I'm going to pay my vendor. I have my sales price. Down here, I can put, if I want to have a minimum of these, let's say, for example, that the minimum amount of laptops I want to have in stock is 5. And if I do run into less than 5, how many maximum I want to have when I purchase some more? Let's say I want to have a maximum of 10. And this stuff becomes really useful later on when we discuss inventory management. This on hand and total value, I really recommend to avoid it because you're going to create all sorts of havoc in your accounting. So avoid these two unless you really know what you're doing. So for the time being, just avoid it. The last note I'll give you is this little section here called markup and margin. This little preview of the percentages, it's only available in QuickBooks Enterprise. Otherwise, if you're working with QuickBooks Pro, QuickBooks Premier, QuickBooks Accountant Edition, you're just not going to see those little previews there. Right? No big deal. However, if you know for a fact that you want to mark up your product, let's say 25%, and you don't have this tool here, you could actually just reverse engineer these. So I'm going to go ahead and delete the sales price. And under sales price, let's say I am told that I must mark up all of my product 25%. So what I do is I take that 480 and I multiply it times 1.25. 1 because I want to get the 480 and the 0.25 because that's the markup. So if I just come in here and type 480 and then times, which is shift 8, and I get a little calculator there and put 1.25, again, 25% markup, and I hit tab, QuickBooks will actually calculate exactly what my sales price should be. And because I'm working with QuickBooks Enterprise, it tells me what the markup is. Now, if you happen to be working with QuickBooks Enterprise, you can actually just click on this little button here called Edit Markup, and you can actually set it up here. So if I wanted to mark this up 37%, I'll just type it in there and hit tab, and QuickBooks will actually calculate the sales price for me. So it's actually kind of a really neat tool But again, only available. That little piece only available in Enterprise. Everything else is available in Pro, Premier, and Accountant Edition. So I'll hit OK. I'll leave the sales price at that, and then I'll hit OK. Let me go ahead and duplicate this item, and I'll go ahead and create another item here called the server. So just duplicate this real quick. That way when we're creating estimates or invoices, we're going to have all this large catalog here. So let's say that's the server S200, and then we'll go and get our part numbers and all that stuff from our catalog list. And here we'll put fast server, and then let's say the cost for this product is $21.50. Okay, and then let's say the sales price for this is $2,500. Okay, on the reorder point and max, I'll leave them at 0 because I really don't need to have servers in stock. Those are mostly custom orders, so just leave that as an example there. Let me go ahead and delete this, and I'll put maybe something else here altogether. Perfect. Just to have a little bit different description. And then I'll hit OK. And then there's my 2 inventory parts. There's my non-inventory part, my other charge, my 2 services. I'm going to do one more inventory part. I'm just going to do this one from scratch. And I'm going to do some software because we sell both hardware and software. So I'm going to inventory part, and I'll put here Microsoft Office. Let's say that we sell Microsoft Office, and then let's say we pay $250 for it, and we sell it for, let's say, $325. Simple. Okay. Cost of goods sold account, we'll choose purchases software. See, that's a new cost of goods sold account we haven't used yet. Income account, we'll pick here sales software. Preferred vendor, I guess that's who we buy the software from. So we'll create here Microsoft real quick. And when you're doing this in the real world, make sure you're capturing addresses and all that stuff, right? That way you're not sort of taking the same shortcuts I'm doing here. And I'll put here Office 2016 for 5 users. Let's say that's what we buy, and I'll go ahead and copy and paste that in the description. And then let's say they don't have part numbers because Microsoft doesn't happen to have part numbers. And then we'll hit OK. And that would be, in a nutshell, how we set up all of our items. Now I want to show you something real quick. I'm going to go into lists and chart of accounts. And then I'm going to go ahead and put these 2 windows next to each other. That way we can kind of appreciate the difference between the two. So the accounts here on the left side, these are the financial categories that we classify every single transaction into, and these go into reports. And here on the right side, we have our part numbers or our products and services or our items. And these on the right side, these are items, and items are best described as the products and services that we buy and or sell that are used in transactions. On this section, we'll talk about creating customers and vendors. Let's start by creating a customer. The best place to create a customer or my database of customers is in the Customer Center. The Customer Center can be accessed many ways. One, we can click on the Customers menu, and we can click on Customer Center. So that's one way of doing it. If I happen to have the homepage open, I could also click on the customer's title on top of the customer's transactions, and I can get there. Or I can use the keyboard shortcut Control J, not Control C, because Control C is copy. So the next best thing was J as jobs. In QuickBooks, there's a concept of customers and jobs, which we're going to get to in a second. So let me go ahead and go into my Customer Center. So now in the Customer Center, this would be the place where you would see the entire database of customers that would be here on the left side. And each detailed information about each customer would be on the top right, and on the bottom right would be all the transactions related to that customer. So we'll discuss the transactions in a different session. So to create a customer, there's a couple of things we can do. One is we can
right click on the keyboard. So right click, and then we can click on new customer. So that's one way of doing it. And that will pop up the new customer screen. Let me go ahead and close that. The other way of doing it is to click on the new customer and job drop-down menu in the top and click on new customer. Here's a job, which we'll talk about briefly. But here's a new customer, so that's another way of doing it. We can click there. Or we can hit the keyboard shortcut, which is Control N. N for new customer. So I'm going to hit Control N, and then that will pop up the new customer screen. Now let me go ahead and unmaximize this. That way we see the screen, the window kind of by itself. So let's break down all the components of this window. So up here at the top, you see customer name. The customer name at the top is the name of the customer as we want to call it internally in QuickBooks. Down here where it says company name or first name or last name would be the official name in which we want to show on documents we give to the customer, like an estimate or an invoice. So it is possible that, for example, I may have a customer. Let's do, for example, a customer that's a hospital, and the actual name of the hospital is South Florida Health Center LLC. And that could happen. You can have an official name like that. But internally, I don't want to call it that. I want to call it Miami Hospital. See how that works? So if I want to call it in my database Miami Hospital, but I want the invoices to print out South Florida Health Center LLC, which happens to be the legal name, then that's the contrast between using customer name at the top and company name in the bottom. Other area of confusion is full name. So you're going to put full name there if your customer is an individual. If it's a company, then we're still going to use the company name. So don't put a contact person there. Only put there if that's the actual customer. It's an actual individual. Now down here at the bottom, you got 8 boxes in which you can kind of change the titles, and we can put a phone number, an email address, Facebook page, Twitter page, website address. We got all sorts of things we can put there. The one thing I always recommend that you put is the main email, because that's where the default email to send the invoices to. So we'll put here ap@miamihospital.com, whatever that email happens to be. Now down here at the bottom where it says invoice bill to, if I click on the little pencil, that's the edit button, a little window will pop up, the edit address information window. And then here in the top where it says address, you should always include the company name there. I'm going to go ahead and press enter, and then under the company name, put the address. Otherwise, if you don't put the company name there, the invoices will show up just with the address. So I'm going to put here an address. And if I want to use multiple lines, like for room number or floor number or whatever, that's totally valid. Now for city, I recommend that you actually put the city on the city box. Don't put it up here on the address box. So we'll put here Miami, Florida 33133. Country and region, totally optional. Note, totally optional. I'm going to go ahead and hit OK. And that's going to be my permanent invoice bill to address. So that's where we send our invoices to. Now here on the right, there's a ship to address. That's if we ship product to that customer and it happens to be a different address, or maybe multiple addresses in which we potentially ship product to the customer to, or that could also serve as service location. So if I don't sell any inventory or any product, but I do have one customer in which I do services in different locations, that is great for that as well. So the first thing I like to do is I'm going to click copy, and that's basically going to duplicate my bill to address into a ship to address. So I have to give it a name. So I'm going to call it main location. You can call it headquarters, main location, whatever. And then you hit OK. And basically the exact same invoice bill to address is now one of your ship to addresses. When I click on my drop down menu under ship to, there's only one option there. So now I can add an additional or a secondary ship to address simply by clicking on add new or clicking on the little plus sign icon that's there. So I'm going to go ahead and click on that. And then I'm going to create a second location. So let's call it north location. And then it will have
some of the address there. Again, as I mentioned before, you also want to have the legal name in there, again, because the legal name of the company or the name of the company, whether it's the legal name or the fictitious name, needs to be part of the address. So let's say this is a different address altogether. And I'll put that information there, and then we'll put here a different city, a different zip code, whatever it happens to be. And then we hit OK. And now basically you got two ship to locations. If I click the drop down, I can pick whichever I want. And then after I pick the one that I want, I click on this little checkbox here that says default shipping address. And then basically what happens is when I create an invoice for a customer, it will automatically show that as the default shipping location, assuming ship to locations is turned on the invoices. And there will be a different session in which we'll specifically talk about customizing the invoices and picking and choose what data you'd like to see there. Let's go to the next tab here where it says payment settings. So let's break this one down. Account number would be only if you happen to have an internal database of customers and numbers associated with it. Most commonly, this happens when you transfer from like an old accounting system into QuickBooks and you want to keep that account number as a reference. But afterwards, most QuickBooks users that don't ever use an account number never really see a need for it. Payment terms would be the default terms that show up when I create an invoice for that specific client. So if I select here net 30, for example, if I select that, when I invoice my client, automatically that would be the terms that will be shown on the invoice. And yes, you can change it on the fly. Preferred delivery method, if I pick none, every time I create an invoice, QuickBooks will not prompt me to print it or to email it. However, if I do want QuickBooks to kind of queue up my invoices for that customer into a batch printing, then I'm going to select mail because I would have to print it, put it in an envelope and mail it, of course. Or if I wanted to queue it up into a batch email or maybe ask me, hey, would you like to email this invoice to the client? Then I would pick email. So that's a really important component of that. Now, preferred payment method, that would be if my customer pays me with a credit card or check or a MasterCard, whatever, by default, and then I want that to show up as default when I receive a payment to the customer. Not that important, but again, anything that would speed up the process will be great. Credit limit would be if you want QuickBooks to warn you that this customer has outstanding invoices over, let's say, $10,000 in total. And then I'm going to create an additional invoice that would cross that credit limit. QuickBooks will now warning you shouldn't do this. Now, you can't really restrict it unless you create a user permission on QuickBooks Enterprise. If you're using QuickBooks Enterprise, you could create a user permission to kind of not allow the user to override past due amounts. But in general, this is just for the purposes of really warning you or letting you know that you could potentially be invoicing more while the customer owes you over a specific credit limit. Now, price level, we're not going to get too deep into it as price level is kind of an advanced feature. But price level, in a nutshell, allows you to create different price tables or discount tables for specific products in which you can assign the default price table or discount table to that particular customer. So every time we invoice them, a specific price table gets applied to the individual items being used. Now down here under credit card information, that will be for us to save our credit card information if we happen to have received a credit card authorization form where the client says, yeah, sure, whenever you invoice me, just charge me automatically. Now here on the right where it says online payments, that would be to enable the option for QuickBooks to send the person receiving the invoice a link in which they can click and pay online, where they can put their credit card number, bank account number, and into it through a service called QuickBooks Payments. Will process that for you, get you paid, all basically electronically. Now that doesn't just work automatically. You have to apply for the service, get approved, add the business bank account, go through that whole process. But otherwise, if you get that, that's great. Great way for clients to pay you electronically. Now, sales tax settings, it's got a couple of interesting pieces. So assuming that you charge sales tax, then sales tax code would be the specific code on whether or not your customer is taxable or non-taxable. Like, for example, if you have a tax-exempt customer, you would put tax code exempt or something like that. And the tax item would be like the individual city or county, however sales tax works in the region that you're in. That way, by default, it's going to charge them 10%, 8%, 6%, whatever your county happens to have. And then resale number, that would be for you to store maybe the resale tax certificate number, tax ID from your customer. That way you have a place where you record that information. Now, additional info, this is really interesting. Additional info, customer type would be for you to group customers by any logical fashion. You want to group them by state, by city, by county, by route number, by who referred them to you, by whether or not they're commercial or resale or wholesale, international, web-based, in-person, whatever. You can create any logical grouping here under customer type, and it comes really handy when it comes to building reports later on in the future, because you can report on open invoices from this group or sales from this customer type. So that becomes really handy later on, mostly for reporting. Now, rep, really interesting. If you track sales by a salesperson and you want that salesperson to be the default rep on that customer, that would be where you put it. If you want to then create commission reports or something like that, then you want to make sure that all the invoices have the rep in it. And by putting it in default, you reduce the chances of potentially the rep forgetting to put their name there. And that really is only useful if there's a default rep for a customer, which happens to be only really useful if that's the case, right? Now here under define fields, this is where we can create custom fields. So if I want to track, for example, my customer's date of birth, their spouse's name, maybe some internal numbers or codes that are relevant to the commercial transaction, I can create custom fields that I can fill in transactions individually or store them here in the customer information for them to be the default one that gets used in transactions, or it gets saved in the customer database. And the last tab here is job info. Really useful if you have jobs on top of customers, and we'll get to jobs in a second, for you to track additional information about the job type, job status, start date, end date, because there's a report in which you can pull the status of all your jobs or filter them based on a specific type. Basically great for just having a quick overview of all your customers and all the active jobs that are out there. So let me go ahead and hit OK, and then my customer will be created. So you see them right there on the left side of the screen, Miami Hospital. So there's my customer. And that's basically how you create customers. Now let's create a job. So a job would be like a sub-account of a customer, like a subcategory of a customer. Okay, so let's jump right into jobs. So to create a job, there's a couple of ways you can do it. One is you can right-click on the customer list on the left side, and then you can click on Add Job. That would be one way, easiest way of doing it. There's no control anything. You can hit control anything. So there's no shortcut per se to do it. So you're going to have to right-click, or you can click up here under New Customer and Job tab. Click here where it says Add Job. Now you do see there is technically a way of doing a keyboard shortcut, which would be clicking on or hitting Alt-N and then A. So technically, if I hit Alt and A on the keyboard, you can create a job that way too. So you can go through the Alt and A keyboard shortcut, or you can right click New, or click on the drop down menu in the top. Now, when you go create a customer, this screen looks identical to the new customer screen. There really is no difference in here. There is one little tiny piece that it's a little bit different here on the right side. You get a customer drop down, which eventually basically says this is a job, not a customer. So a subcategory of a customer. So here under job name, we're going to call it, we're going to give it a name for the specific project. So let's say we're going to number them as well. So I'm going to put 001, and then we'll call it maternity expansion. Okay, and basically that's what we're calling it. That's maybe what the hospital is calling it. We are doing some work on the maternity wing of the hospital, and that's basically the name we're going to give it. So I'll create another job as well. I'll click drop down and then go to add new, and then we'll do the second, and then we'll call it North Location Remodel, right? Whatever job happens to be. Now notice that when I added the job, I didn't pay much attention whether that job belonged to Miami Hospital or it belonged to maternity expansion. There's obviously a mistake there. I made that one a sub account or a job of the job. So if I wanted to fix that, I could just right click on it, click on edit. So again, right click edit. That will take me into the screen that just popped up here. And then here on the right side where it says customer Miami Hospital, I just hit the drop down and say, no, this is not a job of a job. This is a job of the customer. Now, there's nothing wrong with you doing it. As a matter of fact, you can create multiple layers of jobs if you wanted to go in that level of depth. So the first question I get is, why even bother with jobs, Hector? That just seems confusing, additional work. And the important thing about jobs is it is possible you have one customer that you do a lot of work for. And at the end of the day, it is just that one customer, but maybe, just maybe, they pay you for each job separately. And when they request a statement or financial information about what is owed and what has been done with each individual separate job, it just makes sense to keep it separate. Also, for reporting purposes, you would not only report on a customer, you can also report on individual jobs within the customer. At the end of the day, you can collapse the information and just see the customer as a whole, including all the subcategories or the jobs collapse, but it does add some additional interesting information. Now, really important little trick about jobs. When you see customers and jobs or the subcategories, you can actually move your cursor right on top of the diamond. So you see if I move it right on top of the diamond, that basically allows me to move it or take it out of the job. So what I can do is I can click and drag to the left. I know it's really difficult to see, but I click and drag to the left and let go. And then the job all of a sudden becomes a customer. Now, it doesn't mean I wanted to do that on purpose. Just make sure you understand that actually when you right click on it and click on edit, you will notice up here it says edit customer. So it no longer thinks it's a job. So at the same token, I can do the same thing. I can click on the diamond, drag it to the right, and make it a job by simply just moving it one layer. So if I drag it one notch, it becomes a job of Miami Hospital. If I bring it down here and then drag it one more notch to the right, then it becomes a job of the job 001. So it's a quick, important trick about moving customers and jobs around. The other shortcut I'll show you is, let's say, for example, I happen to be creating an invoice and I forgot to create the job, and now I have to go back to my customer center to create the job. Not necessarily. I can actually start by typing the customer's name, and this actually works on any screen in which you're working with customer names. So I can just select the customer by itself, then I can click right at the end of the last letter, add a colon, right? I can add a colon and then type another job name. So I can add a colon and put 003, and we can call it South Wing, whatever. Let me just zoom in so you can see, right? That colon right there, very obvious. We added that colon. I typed that colon in there. And anytime you already have a customer created, you type a colon and then you type something next to it, you're telling QuickBooks that you're creating a subcategory, you're creating a job. So here I can just click Quick Add and it will create the job on the fly without me having to go in the customer center and doing it and see how it was added to my database on the fly. Really, really important piece of information to know about adding jobs. Okay, so let's talk about adding vendors. Now, vendors are a little bit easier, specifically because you're likely to have a lot more vendors than customers. As you know, we have all sorts of people we buy stuff from, office supplies, gas. You got like 20 different gas stations, 100 different restaurants. and we tend to create a vendor for each one. So the vendor list, it's a little bit easier just because we work with it a lot more. And it's also a little bit easier because for the most part, we don't store address, phone number, unless we actually do purchase orders or we have a deep relationship with a vendor. But a lot of these vendors like Apple Store, Best Buy, Dell, HP, Shell, whatever, we end up just buying stuff at the stores and we don't store phone number, address, all that stuff. You can and you should if you're doing purchase orders or if you're buying inventory. But a lot of times these vendors, we create them on the fly. Now, the other thing that makes it quite easy is with vendors, you can't have subcategories of vendors. No sub vendors, no jobs for vendors. So it's easy. So I'm going to create a new vendor by clicking the drop down and clicking new vendor, or right click new vendor, or control N. Any of those work. And this is pretty much the best. I mean the same sort of process. We just type the vendor's name up there. We choose whether or not we want to add all these details. We got payment terms if we have bills for them. Credit limit the same way with customers. The only different thing here is that you can have in your internal database, you can have a customer name, and then when you print the check, it comes out different. And this is common because we deal with some vendors that say, hey, just write the check to so-and-so or whatever. So that becomes handy to put something different there. Now, under tax settings, this is where you can put your vendor's tax ID or the EIN if it happens to be a vendor in which you want to issue 1099s at the end of the year. And QuickBooks has a module for producing the 1099s. It is an actual fee that you have to pay to submit them online and e-file them, because the IRS more and more, they're doing away with paper filing. So as long as you put their social security number or EIN, tax ID, and then you mark it eligible for 1099, then the workflow for creating the 1099s pretty much comes in automatically. Now under account settings, this is really interesting. This is where I can select a default category, and basically no matter what I do over time, what category I use for Exxon in the future, automobile expense will always default, forcing the user to kind of think about using something else because that's the one that will pop up automatically. So that's up to you. You don't have to do the default accounts, but that does or could really speed up data entry process in the long term. And then we got additional info where we can store a vendor type similar to customer type. We can group our vendors in any logical way, shape, or form that we see fit, whether it's going to be service provider or inventory suppliers or regulators or local service people, national service people, web services, whatever. You can create generic categories in which you group your vendors, and that becomes useful for reports. And then custom fields the same way. Again, if I want to store a specific piece of information of that vendor in which none of these 5 tabs give me access to, that's another way of doing it. Now, one little tiny thing I want you to pay close attention to is this thing here that says open balance. A lot of people get confused at that and they end up putting a number there. Just remember, if you're going to create a vendor, don't put an open balance, because normally you're going to create a transaction, right? So that's only handy if you're going to import an accounting database in which you're bringing vendors with opening balances and you're not going to create those open bills individually. You can use that, but normally I kind of ask you to stay away from it just because it becomes a little bit confusing. And if you are going to bring in a database of old customers, old vendors, I'll probably work with a kind of a QuickBooks expert with that, just because it could become a little confusing. But otherwise, you absolutely can do it, and that's a place where you can put it. So I'm going to go ahead and hit OK, and I'll hit no on the tax ID question, and that's it. So that's how you create customers or vendors. Now, another common question that I have is, hey, how do I rename something a vendor that I created in which I named it incorrectly? Well, simple. You just right click on it, click on edit, and then change the name, right? Whatever, anything you want to add to the name. Now, another question is, how do I get rid of vendors? My vendor list is huge. Well, I can just right click on them and click on delete vendor.
And QuickBooks will say, are you sure? And you're going to say, yep, I'm pretty sure about it. However, there are some vendors in which I've done transactions with before. And if I have at least one transaction with that one vendor, if I try to delete, let me show you, QuickBooks will say, well, so I understand what you're trying to do. However, because of accounting, I can't just delete the vendor because it's being used in a transaction. I'm not going to delete the transaction. So that in that case, you can just click on make inactive, and that will just hide it from the database. And if you ever wanted to see it again, you would click up here where it says active vendors, or if I happen to be in customers, same thing, active customers. Click on all vendors, and then once you see your inactive ones, like this FPL that has the X on it, then I can just click on that X and I make it active again. So it's kind of an interesting thing about creating customers, creating vendors, deleting them, making them inactive as you see fit. And that in a nutshell is how you create vendors and customers. On this section, we're going to be talking about customer transactions, estimates, invoices, customer payments. So right here on the homepage, on the QuickBooks homepage, which by the way, if you happen not to have the homepage open, all you have to do is go into the company menu and click homepage. Now, I really like using the homepage as a way to illustrate all the workflows related to customers. So you're going to see right here on the customer header, that's the title of this box here. This entire box is the one that contains customer related transactions. Now, the other place where you can see all of your customer related transactions, it's going to be in the customer menu. And in the customer menu, you're also going to see all the options or all the transactions that are related to a customer. Now, let's talk about a workflow specifically. Most sales start with the first point, which is estimates. Most people, before they buy anything, they want to know how much it's going to cost. So the estimate is a way for the QuickBooks user to create a formal written history of that price quote for either a product or a service that was given to that individual customer. Now, not every customer requires a written estimate of the price that they quoted. Either way, if you want to keep track of the prices that you have given out there, I strongly recommend that we get started at least with an estimate. Okay. So after the estimate is created, we're going to wait until the customer responds and agrees to buy, or maybe disagrees to buy, whatever the situation may be. And then we go to the next step in the workflow, which is creating an invoice. Okay. So once we deliver the product or complete the service, now we were going to go ahead and invoice the client. Now, the purpose of invoicing the client is to let them know that we did work or we gave some product and now they owe me money. But when we create estimates in QuickBooks, immediately we recognize the sale, the completeness of the sale, but we know we don't recognize the money coming in or the payment yet. That happens to be a second transaction or a third transaction in this case. It will be a secondary workflow, which is receiving the payment. So invoicing the client, which is the act of delivering the product or completing the service, it's a completely separate transaction from received payment. Now, when the payment is received, QuickBooks will ask you, where would you like to put that payment? In some cases, that money goes straight into the bank. For example, if you get paid with a wire transfer, that goes straight into the bank. But most commonly, we get paid in cash or with a check. And most small business owners don't really go to the bank every single day or immediately after getting paid. Most people will group those payments and maybe go to the bank every Thursday or every Tuesday and Thursday and that sort of thing. And this is why there's a step in between receiving payments and bank deposit. Is basically two transactions. As you can see right here, there are two separate icons. It's because there is a chance, or there is a common case in which we'll get payments from multiple customers throughout a couple of days. And then we want to bundle them all together into a single deposit using the record deposit transaction. So that's why it is a two-step process, receiving a payment and then recording the deposit. Now let's go and start doing some examples. So let's start with an estimate. So I'm going to go ahead and click on estimates.
And let's first start talking about the general structure of the estimate window. So first off, depends how you have QuickBooks configured. You may see this bar in the top or this bar in the left. Now that can be easily changed by clicking on the view menu and changing it, for example, from top icon bar to left icon bar, and that will completely change the look of the screen. So it's really important for you to decide whether you want a top icon bar or a left icon bar. The left icon bar can also be collapsed by clicking on that little collapse button. And the purpose of doing that is to give us as much space and real estate in that estimate window as possible. Now, the other part I want you to pay attention to is here on the right side, we also have a right pane that has a sort of a name information tab and a transaction history tab. And that could also be used later on in the future. So I'm going to go ahead and collapse that as well and just get as much real estate as possible into this window. Now up here in the top bar, we have what's called the ribbon. Now there's multiple tabs and each tab has a different set of functions and buttons. For example, I'm in the main tab and there's a couple of options here. There's also formatting with some additional options, send and ship, report, search. Later on in the future, we'll dig deep into what those functions are. For the time being, just kind of get acquainted with the estimate window. Now, the first input box that we see is our customer job section. This is where we either select for my current customer list, if I happen to have the customer in my list that I'm about to give an estimate to, or I can just click add new and create a customer on the fly. So let's say, for example, I'm going to create a customer on the fly here. Okay. I'm going to skip address and phone number and all that stuff. We had a different section that talked about that. For the time being, I'm just going to put the name and then I'll hit OK. So yes, it is completely okay for you to create customers on the fly like that. The next button you see is the template button. Now in here, you can choose among different templates, and you could have designed some templates with logos, some without logos, some with certain fields, some without. So there's a lot of flexibility there in terms of having multiple custom estimates. The next box you're going to see is date, and that's always going to default to the system date. So whatever the system date happens to be, the day that I'm recording this video, this is the default date that is there. But if you want to change and backdate that estimate, you're welcome to do so, or future date it, whatever you want to do. Now, estimate number, it's an empty box, so you can actually override the number if you want to. Now, I don't recommend overriding the number. I think that we should allow QuickBooks to use its own natural numbering system, and every single new transaction you create, QuickBooks will create the next number. So if I do 502, the next one will be 503, and so forth. Now, if I happen to do an override, so I'm just going to type 1001. If I override it this one time, next time I create the next estimate, it's going to go to 002 and so forth. So let's do that so we can see that in an example. And then here on the name and address, this is where you can change the name of the customer or the address, whatever you want to do. Now, item is the next input box you see there. And this is where I can click from my menu of items that I previously created. So I would have created that before, hopefully before starting an estimate. Now, if you don't have the item in your list that you're about to do an estimate for, you are welcome to click add new and create the item on the fly. Refer to session 4 that talks about all those items and that sort of thing. So for the time being, I'm actually going to pick items that I have on my list. So I'm going to provide Maria an estimate to do some, let's say, some computer work. So I'm going to select my hourly support item, which is my sort of standard item that I created for that. And under description, if I happen to have a description of that item, that would populate automatically, but this item happened not to have a description, so then I can type whatever I want in here. So I can put clean up Maria's computer. So let's just assume that I'm doing some computer work. Under quantity, in this case, if this is going to be hourly support and that's the name of the item, then obviously the quantity is going to be hours. Now, it's really, really important that you have a lot of clarity around what the unit of measure is. So if you are charging by the hour, your quantity should be hour. Now, it is possible, and we have another session where we'll talk about modifying the look of the template, it is possible to change the name of that header and put the word hours if you wanted to. So let's say, for example, that's going to take me 3 hours. Now, on an estimate, it is possible for me to put a rate, which would be like an internal cost, like an internal calculation of how much I think is going to cost me that hourly support item. And then under markup, I can just add a percentage or a dollar amount that I want to mark up on the deal. So that's a nice thing about the estimate, that you can work in this rate markup dimension. Now, if that's confusing, if you don't want to work that way, you can work a different proposal, and there are multiple proposal templates, and you can also edit them in which we hide that information and we just work with the end price. Now, keep in mind that even if you were to choose to work with the internal rate and the markup, you can still hide that so the end customer doesn't see it. So anyway, so this is $75 an hour times 3. The total is $225. And you notice that my individual rate is hidden from this particular template. This is why you got multiple templates, so you can work with the one that you think is going to be best. Anyway, so let's say, for example, I'm done with the estimate. At this point, I could print it, give it to my customer. So I can click on print. I'm going to click on preview just so you can see what that's going to look like. And that's the standard template that comes with QuickBooks. Now, there's no logo, no colors. You're welcome to change that, and we'll have another session that covers that. But for the time being, let's just work off the default. And this is exactly what your customer is going to see. So at that point, you may require a verbal agreement. Maybe they need to physically sign the estimate. Whatever you want to do, that's really up to you. Now, you can also email it to your client. So I can click on this email button and click email estimate. And on this screen, I have to make sure that I do put my my client's email address and my own if I haven't set it up before. So of course, if you had not configured an email address in your own QuickBooks, you're going to be asked to doing that. But the most important question is, hey, what is your customer's email address so I can email that invoice to them? So when we hit OK, then QuickBooks will ask you to connect it to your Outlook profile, or maybe create your Gmail connection or Yahoo, whatever email you happen to have. And then you click on send now, and that will basically send the email over. Now, I haven't configured it on the sample file, but basically, in a nutshell, what you are going to get is a PDF of that estimate attached into an email. And you can also modify what that email looks like if you want to change sort of like the template of the wording. But what the end product is going to be a PDF of the estimate. So once we finish with that, I'm going to go ahead and hit save and close, and that will just save my estimate into my system. So I really don't have to worry about it anymore or think about it anymore. I have a saved estimate. And one of the nice things about QuickBooks is I can go into customers, customer center, and I can click on this little tab up here where it says transactions, and then click on estimates, and then I will have a list of all my estimates. Now, we'll have a different session that talks about what I call customer management and receivables management, in which we explore what all these windows do. However, for the time being, there's an estimate in the system. You just have to remember or know that it's there, but you really don't have to think about it anymore. Now, at the same time, we can have another customer call in and also require an estimate. So let me go ahead and click on estimates, and then we're going to have an entirely different customer. Let's say, for example, that Miami Hospital, one of my commercial customers, specifically the maternity expansion sublocation, requested an estimate, a big one. Okay, so we're about to get a big estimate. So let me go ahead and select my customer up here. And then here on the estimate number, you will notice that the last estimate we created was 1001, and then it automatically moved it to 1002. Now, under item, I can now pick all the items from the estimate the client requested. So let's assume for a second that the client is asking me to sell them a couple of computers, do some installation, include some cables, and also do some training. So let's be very specific. The client's asking us to sell them one server, 25 laptops, installation for each laptop, additional software for the laptop, all the cabling required for the laptop, and then some training. So we're gonna use those circumstances to build an estimate using all the things the client is asking us to sell them, and we're gonna use what I just said as the way we create the estimate. So let's start with the server. So the client told me that they want to buy one of the servers from me. So I'll go ahead and pick the server from an item list. And under quantity, I'll go ahead and put 1. And then there's my default price to my customer, $3,500. Let's say, for example, I don't want to mess with that. Let me also charge my customer some of the installation required to do that server. But I have 2 types of services. I have hourly support and level 2 support. And let's just assume that a server is more expensive. So we're going to have, let's say, more expensive type of services. So that's why we have 2 separate service items there. So I'm going to pick my level 2 support, which is at $150 an hour. And we'll say that it takes about 4 hours to work on that. So I'm going to go ahead and overwrite the description because maybe I don't need to have the word level 2 support. Maybe I want to have something more specific like installation of server. And let's do it all caps. Installation of server. Perfect. Okay. Then I'm going to go into the next line where I'm going to start now accounting for the laptops that I'm going to sell. Now I like to skip a line. So I'm just going to go ahead and just simply skip a line right there. So I'm going to skip a line and then put my laptop there. So I'm going to hit from my drop down screen if I don't know the name of my product. And there it is my laptop Dell X300. So I'll pick that one. And then I'm going to go into quantity and then I'm going to put 25 because that's what my client asked for. They asked for 25. Then on the next line, I'm going to put the service related to that particular product. So let's say, for example, to install laptops is really going to be the regular hourly support service. So I'll pick that. And again, I'm using this example that's very specific to a computer company, but this is what I want to get you thinking about, that depending on whatever business you're working on, there's going to be a mixture between products and services typically sold, and how you organize them in one order, how you put them next to each other matters. And it makes it easier for the customer to decide to buy from you or not if the presentation looks nice. So hourly support, I'm going to put here installation of laptops. And I'm going to say in parentheses 1.5 hours per unit. Okay. So then in that case, I have to multiply 25 times 1.5, which I can actually do on the fly. If I happen not to know what that number is, I can put 25 and then I can put times, which is shift 8 in most keyboards. So times 1.5, and then I'll hit tab, and then QuickBooks will calculate that for me. And I just did that basically on the fly. So I got 37.5 hours times $75 an hour. And then there is my end result. So let's say, for example, they also wanted me to include all the cables required to plug all these computers in. So I'll put it right under the laptop. I think I have an item for that. Yes, I do, network cables. And let's say it's just going to be a flat fee. So no units. We're going to guesstimate it's going to be about $250 in cable. So we're going to put, change the description and put total cables and connectors needed, something like that, right? And that way, the customer doesn't have to have everything piecemealed, everything by the unit. Sometimes you can just put a lump sum amount to represent that. And let's say, for example, they also asked for a training service. So I'm going to go ahead and use my level 2 support because I guess that's the rate that we use for training. And then we'll put here training of 50 staff members over 4-day period, and we're going to type flat fee per day. Okay, so because I'm going to flat fee it out per day, then under quantity I'm going to put 4 because that makes sense. It's a 4-day period. But let's say that whatever a flat fee for training is, let's say it's $975. That way it will just do the mathematical calculation. 4 times $975 is $3,900. And that in a nutshell is how you construct an estimate using items that are already on your list. Now, one of the issues is 1, 2, 3, 4, 5, 6, 7. There's only 7 lines there. So there's one way you can make that a little bit bigger so you get a little bit more lines, which is you can click on the maximize work area button on the top right. So that's the little, all those arrows that go in every direction. So if I just click on that, it's going to get rid of the ribbon and give me a little bit more space. It doesn't give me a heck of a lot of space, but it gives me at least 3 or 4 more lines. And then I could just click on the icon that says restore your work area to get back to where I was. So that I get a little bit more of space by clicking that button. Let me go ahead and click on print and preview just so we can see what the estimate's going to look like. And I do get a spell check, right? So if I misspell something, I could ignore it or use a spell check if I wanted to. So then there's my estimate here. Let me go ahead and zoom in. And this is exactly what the customer is going to get, right? In this particular template, the individual items are not showing. That's just the way this template was configured. So you may, again, look at the other session that we're going to have on modifying templates, where we'll discuss how to pick and choose what we're going to show the customer or hide from the customer when we do an estimate or an invoice. Okay, so that estimate is done. I'm going to go ahead and hit save and close. And let's say that's it. Those are the two estimates that I did for the day. Now, let's say my first customer calls me back and says, okay, let's go ahead and do it. Let's do the service that you quoted me. So then we'll go to the house and do the service or perform the work or deliver the product, whatever it happens to be. And then we're ready to invoice our client. So the next step is we're going to click on create invoice, and we're going to choose our customer job. And there it is from my list. And QuickBooks will recognize, and you're going to see it by that available estimates window, QuickBooks will recognize that there are outstanding estimates for that customer. Now, if I hit cancel, it's just going to go to a blank invoice, and that means I would have to retype everything I already typed on the estimate, and that's really not what we want. But if it happens to be us trying to invoice the client for something completely different than the estimate, then that's what we would do. We would hit cancel. But let me go ahead and hit clear down here at the bottom and start over and select my customer Maria Gomez again, so we get that window. So available estimate. So let's say we do want to pick from that available estimate. We'll go ahead and select that. You're going to see the darker green there. That basically lets you know that you have selected that estimate. And then we're going to click OK. Or we can also double click on that. It gives you the same effect. Then once you do that, everything that I had already typed on my first transaction, the description, the price, the item name, the quantity, it will port over to the invoice. So there's not additional work to do an estimate and an invoice together. So there's my invoice, which contains a service item. And we can click here where it says terms. And again, refer to the other session to pick and choose what fields you want to see here or don't want to see here. But under terms, we tell it, well, we're going to give you, let's say 15 days to pay. And then that will make that invoice overdue after 15 days. So we'll go ahead and either, again, print it. Let's go ahead and click preview to see what that looks like. So we'll either print it, give it to our client, or mail it, or click on email it to our client, whichever way we want to move forward. So I'm going to go ahead and hit save and close, and then hit yes. And then there's my estimate. So my estimate has been created, and I'm ready to now receive a payment from a client. So again, if I am getting paid on the spot, then I don't want to do an invoice. I want to do a sales receipt. Now, why do I want to do a sales receipt instead of an invoice? Because the sales receipt is an invoice and a payment combined. So instead of taking two steps or two transactions, because the monetary compensation, the payment from the client, and the invoice is being issued at the exact same time, there's a direct exchange at the same time, then at that moment, I would use a sales receipt instead of an invoice. But let's say that's not the case. We do the work and then the clients pay us later. So if you're going to do that, do the work now or deliver the product now, get paid later, then you want to use the invoice payment workflow. So again, this is why sales receipts is slightly to the right of receive payments, just kind of letting you know that this one will override these two steps. Okay, so anyway, so let's go ahead and click on receive payment. And then this is a different screen. This is the screen where we pick and choose which customer is paying us. So let me go ahead and click on receive from and pick Maria Gomez. And there she is with her open invoice of $225. I'll just basically hit a little checkbox there, letting QuickBooks know that I want to apply that payment to that invoice. Now in here, I can choose to receive a different amount. Let's say, for example, the client is paying me short. That's possible. Or partial payment, whatever. So you would be able to change that. Or if what you got paid is actually $225, that's what you would put there. Now, this little buttons here allows me to choose, what's the type of payment? Did I get paid in cash, check, credit, debit card, hit the drop down menu, and I can have even more payment methods. So I can actually go to payment method and I can type wire, and I can basically create a payment method for wire if I wanted to kind of categorize them like that. So if the client was paying me with a wire transfer, I can just pick that wire there, or I can pick cash, check, whatever the default ones are there. Now, if you do get paid with a check, I strongly recommend that you take the number from the check that you got from the client, right? The physical check, read the number and type it in here. And that's always useful because clients always think they paid you already, especially when you charge the same amount every month if you happen to be in that type of business. So if the client comes back and says, yeah, I did pay you, check 45454 or whatever, you can go back and research it, look at it and say, yeah, you're right, you did pay me, but that was for an entirely different invoice. So that becomes useful for you to keep that as a record there. Now, if you get paid in cash, there is a place for a reference number, but it's not really that useful unless you're giving out manual cash receipts or something like that. And then under credit and debit, you can actually put the number or don't put the number. And if you do enable payments, it's an additional service you can get with Intuit called QuickBooks Payments. If you enable that service, you can actually physically put a credit card, and QuickBooks will actually process payment and get you paid through the merchant system. Even when you email the client the invoice, you can even enable a digital payment option where the client themselves, the end client that gets the invoice, can actually pay you electronically as well. So it's really neat what you could do with that QuickBooks Payments option that you can add as well. But let's say, for example, they pay me with a check. So I'm going to select check there. And then I'm going to hit save and close. And now that payment is fulfilled. So that invoice is no longer showing open. That's actually fully received, fully closed, fully paid. Now you're going to see the next step here is record deposit. Now, if you're working with QuickBooks 2017 and above, you're going to see that little bubble there with a 1 or a 2 or a 3, just kind of letting you know that there are pending payments waiting to be deposited. If you're working with 2016 or older, that little bubble with the number is just not there, but the process is the exact same thing. Now, if I want to make the deposit to the bank, I'm going to click on record deposit, and then you're going to get a pop-up window that's going to say, hey, you got this much pending to be deposited. Would you like to pick it and actually use that in a deposit slip and go to the bank? So let's say, for example, I'm not going to go to the bank yet, so I'm not going to complete that deposit. So let me go ahead and hit cancel and then close that window. We're going to go ahead and receive another payment. We're going to receive a partial payment for that big project that we had for that Miami hospital client. So I'm going to go ahead and click on receive payment, and notice that I'm receiving the payment even before I do an invoice, and that's okay because some clients pay in advance, and that's totally fine. So when it goes to receive from, I'm going to pick the specific customer or job that they're making that deposit to. Notice that down here, there's no open invoices because we only have an estimate to work with. So under payment amount, let's say they're paying me $10,000, and then I'm going to choose the date that they're paying me with. Maybe I'll put the check number from my client, and it would be useful for me down here under the memo screen, put prepayment for estimate 1002. Okay, so that just becomes just basically good reference for me to know that because I'm not applying it to any specific invoice, I know that that's going to be a deposit for a future invoice. So I'm going to go ahead and click save and close and hit OK. And then I'm going to click on record deposits. And then I'm going to see two customer payments that I have received that now they're ready for me to make a bank deposit. So let's say, for example, that's the case. I'm going to grab those two checks and go to the bank and make one single deposit for $10,225. So I'm going to select both of those amounts, and those two amounts are going to add up here in the bottom, and that's going to match up my deposit slip, and it's also going to match what the bank shows. So I'm going to go ahead and hit OK. And then here on the top left, really important, if I'm working with several bank accounts, make sure we pick the correct bank account. And down here in the deposit subtotal, again, it tells you what's going to show up in the bank statement, what's going to show up in the deposit slip when you actually make that deposit. And then you're going to get the two lines with each customer letting you know what payments are inside that deposit. Now, this area here where it says from account undeposited funds, that's basically letting you know that the money came from an account called undeposited funds. Now I'm going to go ahead and hit save and close, and it can explain what that is. So I'm going to go ahead and hit save and close. And undeposited funds is this account that sits in between these two transactions. So in between receive payments and record deposits. That's the accounting account. That is the temporary account where all of the customer payments go into before we make the bank deposit, assuming we're doing this two-step process. This is why when I record the deposit, it looks like it's undeposited. It's not undeposited. It means it came from the temporary undeposited funds account. So that's what that means when you actually see a deposit and you see the word undeposited funds there. That's totally normal. That's actually a QuickBooks thing, but it's totally normal, and it is something that you are expecting to see. So I'm going to go ahead and hit save and close. Now, let me go ahead and now invoice the estimate that I did for the Miami hospital, the one with the big job. Now, I'm going to give you a quick warning. I shouldn't be invoicing inventory. Okay, so I'm going to go back and create invoice and show you what I mean by that. So I'm going to select my customer that I already had an estimate for. And then I'm going to select OK, select the current estimate. And QuickBooks should give me a warning saying, hey, warning, you shouldn't be selling product that you don't have in stock. Now I'm going to go ahead and override it just so I can finish the example. But that is a window that you should pay really close attention to if you're managing inventory. You should never ever sell something that you don't have in stock, because that's going to create a negative inventory transaction and it's going to mess up your financial statements. It is possible that you may want to work with another transaction called the sales order, which is somewhere between an estimate and an invoice. And there's going to be another session in which we'll go in depth into sales orders and the concept of back order. For now, we're just going to make the assumption that we had it in stock. So I'm going to go ahead and ignore those messages. We're going to have our next session will be about vendor transactions. And we'll talk about creating a purchase order, a bill, receiving the inventory, paying that bill. That will be on the next session. For now, I'm just kind of laser focused on the invoice. So there's my invoice, although, like I said, there's some errors because I'm selling stuff that I don't have in stock. But for the time being, I'm still going to be able to move forward and create the invoice. Okay, so I'm going to pick the terms. So let's say I'm going to give these people 60 days to pay. And there's a couple of fields here on the invoice. Again, those can be modified if you want to. Select the date that you delivered the product or completed the service to match that. And then we're going to go ahead and click save and close. Okay, so once that is completed, I get a pop-up saying, hey, your customer has available credits. Would you like to apply them to the invoice? Now that only happened because previous to creating the invoice, I received that prepayment for $10,000. So if I do hit yes, I can actually apply that prepayment if I want to. I'm just going to hit cancel for now, just because we're going to have another session that talks about prepayment. So we'd like to just laser focus on that portion. So I'm going to go ahead and click on receive payments. And let's say later on in the future, when I do get the payment for that particular job, there's my invoice there for $21,000, which is showing an available credit of $10,000, which was the previous prepayment. And then at that point, let's say they're going to go ahead and pay us the difference. So I'm going to put here the difference of payment and put the check number for my customer, and then go ahead and click save and close. And just to do one more example, I received the payment first. The money is sitting in undeposited funds. Now I have to make the deposit. So I'm going to go ahead and click on record deposit and select that payment that I got from my customer. And whenever it's time to go to the bank and make the deposit and create the deposit slip and so forth, I'm going to use this function. Make sure that I check which account the money is going into, and then save and close. And that's in a nutshell how we create estimates, invoices, receive payments, and record deposits. On this section, we're going to be talking about the vendor workflow or vendor transactions. If you're in the home page, which by the way you get to the home page is by clicking on the company menu and home page. And as I mentioned before, I really like using the home page as a place to understand the workflow. Anyway, in some cases, we actually purchase inventory to have stock in the warehouse. And in that particular case, we would go straight to purchase order. In some other cases, we have orders that we place beforehand like an estimate or a sales order, which is not shown here. The icon would show right around there. And we would want to place an order for inventory based on that specific estimate or sales order, and then use that workflow, right? So we're going to follow the icons and go for estimate straight to purchase order. So you can either create a purchase order from scratch because you're buying inventory for the warehouse or for stock, or you can follow it through from a sales transaction like an estimate or a purchase order, a sales order, I mean. Anyway, let's create a purchase order from scratch. So we're going to go ahead and click on the purchase order icon right there on the desktop, and we'll click on that. And we're going to get a form that looks very similar to an invoice, an estimate, a sales order, any of the forms for either selling or purchasing that all look very similar. This left navigation bar, we're going to go ahead and collapse it by clicking on that caret there, the little triangle shaped icon there. That will give us a little bit more real estate to work on. On the right of the screen, we're going to do the same thing for the name and transaction history pane. We're going to go ahead and hide that. That will give us a little bit more real estate. I'm going to hit escape for a second just to show you we get out of the purchase order altogether. And let's say I'm not on the home page and I want to create a purchase order. So there's a couple of other ways to do a purchase order. One, we can click on the vendor menu on the top and then click on create purchase order. And if you do quite a bit of purchase orders, you can follow the keyboard shortcuts. So for example, you see there's an O that's underlined, and then you see the U that's underlined. That basically means that if I follow Alt O U, that would enable my purchase order. So I'll just do it on the screen here real quick on my keyboard. So I'm going to do Alt O U, and that will open a purchase order. Another place where you can access purchase orders is if you happen to be inside the vendor center because you're managing payables or something like that. We can click on the new transactions button right there on the top right of the screen, and then we can click on purchase order. So that's also possible for you to follow that workflow. All right, so let's talk about the components of the purchase order. So first of all, the ribbon at the top of the screen, which is common to all the transactions, invoices, sales, orders, purchase orders, estimates. In the top, you're going to see main. You're going to see in the top right, it gives you the previews and the next transaction. And that basically cycles through past transactions we have created in the past. Now, if I want to recall a purchase order that I already know about, that we have created in the past, I'll just click on the find button right there on the top right and put the number of the purchase order, whatever it happens to be, and then click on find, and that will take you straight to that purchase order. Now we'll skip some of those buttons up there so we can start talking about the actual transaction itself. So the first thing we do is click on the vendor drop-down menu for us to choose which vendor we're going to purchase from. Now, if we don't have the vendor, we just click on add new and then create our vendor on our normal process. So let's say, for example, I'm going to buy some office supplies from Office Max, and for whatever reason, let's just assume that I resell this, right? So I'm going to go ahead and create my vendor here real quick. I'm going to skip address and that stuff just because we can speed things up by just doing that in the example. So we'll skip all that stuff. But of course, I strongly recommend that you do enter all the vendor information there, especially if you're going to write him a check and mail him a check. That will become really, really useful. Anyway, so we select the vendor. And then there's a drop ship to button. So basically drop ship to is designed for us to give the vendor instructions to take that inventory that we ordered and ship it straight to the customer. So if I select a customer here on the drop ship to location, you're going to see on the top right of the screen, you're going to see the ship to location. It's actually one of my customers' address, which is based on the customer job that I selected up in the top. If I just simply delete that altogether and hit tab, you're going to see our own company address reverts back into the ship to box in the top right. So that's just an option. Of course, not everybody does drop ship. Now the date, of course, you would pick today's date or whatever date of the order, purchase order number. You should allow the sequence that QuickBooks creates naturally to occur. I don't recommend you sit there and you modify purchase order numbers. A lot of people, what they do is they take the invoice number or the sales order number or the estimate number and they put it in there. So they force the purchase order to carry the same number as the original order in the assumption that they're doing back orders or something like that. I don't recommend it. Just allow QuickBooks to have its own natural workflow. If you want to make note of the original estimates to the customer or sales order to the customer that cost you to have to make that special purchase order, I recommend to use the memo down here on the bottom right of the screen. You can put there SO1234 or whatever to let you know that that came from sales order 1234, or that sales order 1234 is the one that cost you to create that purchase order because it happens to be a custom order. So that's just an example of how you should handle annotating an original sales to a purchase order. Anyway, let's just do a regular order of inventory items for our warehouse, for our stock. So I'm going to click here under item, and I'll select whatever products I'm buying. So whatever products I'm buying from this vendor, I just basically select the product, and that's going to automatically put the description. That's part of obviously the item name and the item configuration. Quantity, this is where I put how many of them I want to buy. So if I put 100, that's just naturally going to multiply 100 times the rate and then give me the total amount. Now, let me pick another item. So I'm just going to click down here under its own item. I'll pick a different item altogether. And let's say I'm going to buy 4 of these. Okay, so basically you see the purchase order start totaling. On the bottom right, you get to see the total of that purchase order. Now I could also skip a line if I want to, for whatever reason, if it makes it easier for me to show what the product being purchased is, or maybe I want to group them together in some logical fashion that will make it easier for the vendor to ship it or group the items together. For whatever reason, I want to insert a line. So I'm going to go ahead and right click and click insert line, and that would work. I can also click on the edit menu on the top right and click insert line. That works just as well. And of course, we can always welcome a keyboard shortcut. That would be control insert. So control insert will give me that keyboard shortcut to add the line, and then control delete. Of course, we'll do the same thing as delete line. Now there's also copy and paste line, which is actually kind of an interesting concept. So if I right click on it and then click on copy line, not the same thing as copy, not the same thing as hitting control C. This is copy line. So if I do copy line, I can come down here on another line, and paste line, I'll basically bring the exact same information from there. So that's useful if, for example, I'm going to buy 4 for customer A and then the other 4 for customer B, and I want to have basically all the work that I did while I was typing that information in that line. If I want that to duplicate, that would be a perfect example of where the copy line and paste line could be used. So here where it says customer, I can tell for let's say internal purposes, I want to tell, let's say my warehouse manager or whatever, let them know that these products are being specially ordered for these 2 customers. So that will help you know, because when you do reports and purchase orders and bills, once you receive them, that customer job is going to be sort of attached to that item. Now that doesn't affect inventory. So if I do order these and they're for a customer, they still go in my stock. They still are going to be part of my quantity on hand. But at least for reporting or researching, you'll let me know that the intention of that order was to give it to that particular customer. Otherwise, if it's inventory that's supposed to go to the warehouse or stock, just leave that customer blank. Or some people actually create a customer called stock, and then they basically select stock in there. You can do that as well. That's not a problem whatsoever. It doesn't cause any issues. That's really up to you, but not really necessary. Now, shipping. I get this question all the time. Should I put my shipping cost in the purchase order? So I would say, if you know exactly what your shipping is, you negotiated the shipping with your vendor. If that's the case, then go ahead and put your freight or your shipping line. I don't think I have one here. Do I have one? I don't. Let me create one real quick. So I'm going to go ahead and create a new item. And I'll go ahead and create a other charge. And that's typically the type of item we use, other charge for freight and shipping charges. So I'm going to go ahead and put freight. And then I'm going to click on this little checkbox here that says, this item is used for assemblies or reimbursable charge. You know what? I know that makes no sense. just have faith in me. Just hit the little checkbox there. And what would happen is QuickBooks is going to open up that item to be used in two contexts. So you can use it on the cost context. That means when I get a purchase order and I receive that inventory. And there's also going to be on the sales price context. That means, let's say, charge the client for freight. And if that's the case, my expense account is probably going to be different on the purchase side than on the sales side. So let me select my account that I'm going to pick for freight. So I got an account here called freight and shipping costs, and it's a cost of goods sold. That looks like the perfect one to use. So we'll go ahead and pick that one. And then on the income side, we have the income account. We're going to go ahead and pick, in this case, let's say shipping and delivery income. So yeah, so it did look like we had an account just for that. And yes, the right side account should also always hit an income account, and the account on the left side should always hit a cost of goods sold account. It makes total sense. And then on the cost, we're going to go ahead and just delete that, leave that blank, because that will change every single time. In other words, we really don't know how much our shipping charge is going to be until we actually get the bill for the most part, right? So we're going to go ahead and hit OK. And let's say for this one, we happen to know, or let's say estimate what the shipping charges are. Let's put here $18.90. And then on the description, I do recommend that you put here estimated shipping. That way you're letting another QuickBooks user know that when you receive this, it should be exact. It should be precise. Okay. So I'm going to go ahead and click Save and Close. And I may get a spell check if I misspell that, of course. So I can ignore the spell check or obviously follow it. And that would be it. I got my purchase order. Now QuickBooks is going to know that I'm expecting a product in there. And again, as I mentioned before, if I go to my purchase order screen and then I click on this little previous transaction button, if I click on that, that would actually cycle through all my previous purchase orders. And if I happen to know that my purchase order was purchase order number 4, I can just click on Find up here in the top right, and I can put purchase order 4 and then click on Find, and that will take me straight to it. Now, the reason why I went back to it is because I want to discuss other things as well. For example, print. If I click on the print button, I can do preview, which will let you more or less what that purchase order is going to look like if you print it or create a PDF to email it to your vendor. There's also a few other buttons here like purchase order, which is basically the same thing, right? That purchase order button takes you to a print screen, but that goes straight to print, not to preview. So those are the two most obvious options up here. We got preview, and we got preview and purchase order. So preview is to see what it's going to look like before you print it, and the word purchase order means print purchase order. That goes straight to print. And then we got the batch button, which basically takes me to a little pop-up screen that allows me to print all purchase orders in batch that were marked to be printed later. So that's what this little checkbox is, to be printed later. That's assuming you don't want to print it right now and you want to basically print them in batch later. You click on that little checkbox, and that's one place that you can enable that massive batch printing. And then you can obviously email it in batch or just one by one to your vendor straight from here. There's a little curious little option here that's grayed out that says purchase order and attach file. So what does that mean? Let's assume, for example, that on my purchase order to my vendor, I need to send them another file that has some sort of technical specifications about what I'm ordering. It could be a picture of the product, or it could be maybe a sketch of it. I mean, if it happens to be some sort of custom product, or it could be, maybe some special instructions that I have in a Word file, Excel file, or PDF file. So what that little option there means, if I click on attach file and I happen to attach something, okay, so whether it's an Excel file or a Word file or a PDF or a picture, whatever, if I happen to attach something to it, then you get a little icon there that shows that one, just letting you know that there's an attachment to that purchase order. So then when you go email it, one of the options would be email it with the attached files. And it's still grayed out because I have to configure my email software to work with my QuickBooks. But when that's there, that's what that option will be for. So that option will actually allow you to attach files with that email to your vendor. Anyway, so that pretty much summarizes what the purchase order is in a nutshell. So let me go ahead and click on Save and Close. And let's go to the next step in the workflow. So the next step normally is we have a whole bunch of purchase orders outstanding, and at some point in time, we send it to our vendor, and our vendor ships it to us. Now, when they ship it to us, we have two choices. We can either receive it with a bill, which basically means I'm receiving the inventory, and because I happen to have the actual bill from the vendor handy, I can actually double check that every price is there, and the shipping amount is correct, and all the quantities are correct. So if I'm ready to do that at that point of receiving, I would click Receive Inventory with Bill. However, some people, some QuickBooks users, delegate the receiving task to other employees that maybe don't have access to a lot of the functionality inside QuickBooks. Like, for example, I got some folks in the warehouse that what they do is they receive product and they ship it, but I really don't want them to be messing with my accounts payable, for example. So I don't want them to be touching my bills. So then I would do this in a two-step process. So first I would say receive inventory without the bill, and then we would do the second step afterwards. So let's start with that step, kind of show you how that step works. So I'm going to click on receive inventory without the bill, and that's going to send me to a screen called the item receipt. Now the item receipt is the same thing as the bill, right? We just talked about it just now, but it's the same thing as the bill, and it can easily be converted to a bill by clicking on that little checkbox there called bill receipt. So if you ever see a bill with a little checkbox in there, if I uncheck it, it basically becomes an item receipt. And in a nutshell, an item receipt is a bill that doesn't post to my pay bills window. Therefore, you can't really pay it until you're verified that the bill is accurate, but it does receive the inventory and it does affect my accounts payable like it should be. Anyway, so I'm in the item receipt window and I click on the drop down menu there, and then I'm going to pick my vendor. So I'll click here, Office Max, whatever my vendor was. And then I get this pop-up and it says, hey, the vendor that you picked already has purchase orders outstanding. Do you want to write one from scratch? Basically, you hit no. Or would you like to pull an existing purchase order so I can mark that one received? And then all the data that you wrote in that purchase order gets transferred over to the bill or to the item receipt. And of course, the answer that we want to put there is yes. Now, if I happen to have multiple purchase orders for that vendor, I'm going to see multiple lines in there. In this case, we only have one. So I would check which purchase orders I want to receive. And yes, I can have one item receipt or one bill that contains multiple purchase orders and receive them all in one shot. Why? Because sometimes we'll send a vendor multiple orders in one day. For example, let's say multiple salespeople, multiple warehouse people send the orders to the vendors, and the vendor, when it's time to ship, they consolidate 2, 3, 4 orders all into one to save you shipping, or maybe whatever the arrangement you have with that vendor. And then once it comes in, they actually only send you one bill, and in their notes they put, okay, this belongs to 2, 3, 4, 5 purchase orders. Now some vendors just always keep it separate. They'll send you one bill per purchase order, and that's nice. But some vendors add it all together, they join them together. And if that's the case, you want to follow through and match your vendor's billing system with your purchase orders. That way, it just all makes sense when you're paying them and when you're reconciling your accounts payable with their accounts receivable. Anyway, so I'll select that PO that I'm receiving, and then I hit OK. And then you notice that all the items and all the descriptions and accounts, amounts, all that stuff, that's going to flow through, including the customer job selection that's over here. And that's in the items tab. So notice that we got an items tab here. A little bit later on, when we talk about bills not related to inventory, we'll be working on this expenses tab. However, for the time being, kind of our focus is going to be on this items tab. And QuickBooks by default will put it into items because these were products and services that we buy and sell are items, and that came from a purchase order. So naturally, it's going to put it in the items tab. Now, some other things worth observing. Here on the right side, we got a column that says PO number, pretty much letting us know that that line item came from a particular PO. And if I happen to have multiple PO numbers in there, you would see them there pretty clearly. And now for 3 of these, I selected a customer job, basically telling me internally that those products were ordered for a customer. So you get a billable a box pop up basically asking you, do you want to bill these products to your customer? Now, this is an area of a lot of confusion for some people. If I created an estimate beforehand or a sales order beforehand, I don't want to mark this billable because billable will prompt me to invoice them again on top of the other documents already created, like a sales order or an estimate. So billable is only for when I order something for a customer, but I don't have an estimate or I don't have a sales order, and I want QuickBooks to remind me to invoice my client for it. So let's just assume that for the first two, that's not going to be the case. We're not going to mark in billable. But for the third one, this Maria Gomez customer, we do want QuickBooks to remind us that I gotta invoice those 4 products to that customer because she's the one that ordered them. Anyway, so reference number would typically contain the invoice number of your vendor. But if you have an item receipt because you didn't have a bill, normally in their packing slip, the document in which they send you the products in and shows you what you have, that has a number. And that typically ends up being the invoice number from your vendor, which becomes your bill reference number later on. But then that's where you type that number in there, and you can change that later. That's completely okay. And then that's really all you need to know about the screen. So I'm going to go ahead and click Save and Close, and that receives the inventory. So just to check and double check, I'm going to go to the List menu and then Item List. When I go to List Item List, I get to see all my products, and then I also get to see the things that I have in stock. So I must have received this product in other purchase orders, but I get to see how much I have of each type. Now I can click on any of these in particular. I can right click, so I get the right button in the mouse, and then I can go all the way down to almost the last choice called Quick Report. Quick Report will show me the history of that item. So I'm going to click on that, and there it is. Okay, so I got my item receipts here that bring the product in there. So it looks like we brought 8 total. 4 were for one customer and 4 were for the other customer. So that makes total sense. I can hit escape, and that will close that window. Now a shortcut for the quick report is Control Q. So I hit Control Q, and that will show me my quick report. Very useful to kind of know what's going on with that item. Anyway, so I got the inventory in stock. At that point, I would probably sell it or invoice it. And we have another section that talks about invoicing and that sort of thing. But then the next step would be entering bills against inventory. So on this screen, I just basically select my vendor, Office Max. It will show me all of the item receipts that don't have bills associated with them that were received as an item receipt without a bill, what we just did just now. And we'll go ahead and select that. And can only be done one by one. So I can't combine multiple item receipts into a single bill. I absolutely cannot do that. So it's every item receipt would correspond one bill. So I select that bill, the item receipt, and then I hit OK. And basically that converts my item receipt to a bill, and it's very obvious because you see the little checkbox on the top right that says bill received, and see how I can just toggle back and forth. In a nutshell, what that did is just took my original item receipt, converted it to a bill, and then took away the original memo so I can type in whatever I want, because the original memo says received items billed to follow, just kind of let the user know what's going on. So I'm going to go ahead and hit save and close and hit yes, and that will receive that bill into my system, which basically already contained the inventory that was received, but now that bill is ready to be paid. Now I want to show you a little bit different workflow. I'm going to click on purchase orders. I'm going to select a different vendor. Let's say I'm buying something else altogether. I'm going to pick here Microsoft, and then I'll pick a different product. Let's say I'm buying some licenses of Microsoft Office. Select that, and then I'm going to put, let's say 50 licenses. And then I got my PO for 7,500, PO number 5. So I'm going to go ahead and hit save and close. And then I'm going to click on receive inventory, the same thing without bill. Then I'm going to pick my vendor, so that would be Microsoft. Follow the exact same process. I'll hit yes, select the PO, hit OK, make sure that my receipt date is accurate, and then I'll click save and close. So an alternative to clicking on entering bills against inventory, an alternative to that would be going into receive inventory without bill, clicking on find, and going through the search process to find through my vendor, maybe with the reference number, with the amount, whatever happens to be, and click on find, pop up my original item receipt, and simply just hit the little checkbox. So that hitting that checkbox is basically the equivalent of doing that two-step process of clicking on receive inventory without bill and then creating the bill afterwards. Of course, I could just create a purchase order. I'm going to do it one more time. So I'm going to create a purchase order, order a different product altogether, hit save and close, and then go straight to receive inventory with bill. I did that too fast. Receive inventory with bill. So I can go straight to that, and I will go straight to a bill and follow the exact same process, but this time around with a bill, not a item receipt. That way the workflow goes straight from purchase order to bill. So it's up to you if you want to go purchase order, item receipt, enter bill against item receipt, or if you want to do purchase order, item receipt, go back to the item receipt in the future, convert it to a bill, or you want to go straight purchase order, bill. So up to you what fits better for your business. But I think it's either way, it's really good for you to know all the differences. Anyway, so I'm going to go ahead and put a reference number, which will be the invoice number of my vendor, of course. And then I'm going to click on save and close. Perfect. Now, let's talk about bills that have nothing to do with purchase orders. So there are many situations in which we get bills for things that we didn't order, but it has to do with like the day-to-day services that we get for our business. So I'm going to go ahead and click on enter bills, and then I'll create a bill, for example, for my electric company, for my utilities company. So I'm going to call this State Electric, whatever the name of my utility company is. Go quick add as a vendor, and then go ahead and put the amount due and the reference number. Sometimes a utility company sends us an actual invoice number or reference number, or sometimes they just say January, or they'll say date A to date B. Whatever reference makes sense to you, put that on the reference number. And then down here where it says items, we're not going to be using items. We're going to be using expenses. Why? Because expenses is for regular accounts, expense accounts, and items is more for products. So for anything that hits my GL directly, which is accounting term for something that goes straight to my chart of accounts, I'm going to use this expenses tab. So I'll pick utilities or whatever the name of my account that I use for my electric services. So I'm going to hit utilities, and then I'll click save and close, and they'll completely save my bill. Let's do another example. I'm going to go ahead and click on enter bills, and let's say I'm going to put the bill from my landlord. So I'm going to put whatever my landlord's name is, right? I'm going to create the vendor for that if that's not already in my database. I'll pick the date. So let's say, for example, January 1st is the date of this bill. On the reference number, I'll just put here January, and let's say this is $1,800. But the most important part is the due date. So by default, QuickBooks is going to add 10 days to all the bills if you don't specifically choose the term. So in the case of rent, for example, most of the times the due date is due on receipt. Basically, if my rent is on the 1st, it's due on the 1st. Now you can create your own terms if these terms really don't match. Let's say, for example, our landlord gives us until the 5th. So it gives us an additional 4 days to pay without really paying a penalty. So I can create the terms called net 4, which will basically push my due date 4 days in the future. And that's a pretty simple concept. We just click on terms, add new, and then we'll call this net 4, basically letting it know that it can go to 4 more days. You can also call these terms 5th day, or whatever makes sense to you, right? Whether it's net 4 or 5th day, whatever you want, you can do that. So you can work with 2 days, or you can say date driven, and you can say before the 5th of the month. So you can actually manipulate it based on a specific day of the month, or a specific number of days after the original bill date. So we'll leave that one there, and then hit OK. And you're going to see that our due date went to the 5th. And this is going to be really important, because when we go pay the bills, we may want to do some prioritization and pick and choose which bills make more sense to pay now or to pay later. based on your business and your needs. And you may want to really, really know what the due dates are before doing all that. Okay, so let me pick my category here. So that's rent expense, whatever that's called in your chart of accounts. And then I'm going to click on save and close. And it's going to ask me, hey, you changed the terms of this vendor. Would you like this to be the default term? So anytime in the future that I create a bill for this particular vendor, these terms will be there defaulted or automated. So the answer is yes, because obviously every time I create a bill, I want those terms to be extended those days. Okay, so we're back at the home page, and I want to talk about paying bills now. So we created a whole bunch of bills, some that had to do with purchase orders and inventory, and some that were just related to our day-to-day purchases, vendors that provide services for the office and things like that. And that was done through enter bills, or that was also done through receipt inventory with bill. So the next step to pay those bills is to click on the pay bills button right there in the home page. The other way to pay the bills is by clicking on the vendors menu and clicking on pay bills. Now, one really important piece is whenever you're going to pay a bill with a check, most people instinctively go to the write checks icon right there in the top right. I mean, at the bottom right of the screen, it says write check. So a lot of people instinctively go to write check, just kind of thinking, well, since I'm going to pay the vendor for a check, I should then use that functionality. But the issue is that QuickBooks doesn't make it really, really obvious that that is a problem. I'll give you an example. If I click on write check and then I select the vendor that I want to pay, again, with the check, like my landlord, QuickBooks gives you a pop-up and it actually tells you very clearly what the issue is. It says there are open bills shown below. You should not be using the write checks window. You should be using the pay bills window because then your accounts payable will be incorrect. But most people get sort of a little bit numb by all these little pop-ups and stuff that come into QuickBooks. So they just go, okay, whatever, and they hit enter and they continue writing the check and there's no other additional warnings. The problem with this is if I use the write checks feature to pay a bill, again, if I use the write checks feature to pay a bill, my bill will stay open. There's no way to link a write check function, a check, to paying a bill. Now, it's totally okay. I'm going to go ahead and hit no and get out of that. It's totally okay to pay your vendor with a check. However, you can't use the QuickBooks check function. You have to use the pay bills function. So that's here. That's that pay bills button that, again, is right there on the home page and also through the vendors menu, pay bills. So when I click on that, it takes me to a brand new screen we haven't seen before, which is my bill payment screen. Bill payment screen is comprised of a couple of interesting filters here. In the top, if I put here due on or before, and basically I want to filter and say, look, if it's not due by the 5th, I'm not interested on it. If I'm not due by the 24th or whatever, I'm not interested on it. So that's kind of an interesting function there. We can also click on show all bills and it'll basically show me every single bill that's there. Now we also got sorting. I love that sort feature. I can sort it by the original date of the bill. I can sort it by the due date in this case, discount date, vendor name, reference number. A lot of interesting places to sort. Now I can also filter by and specifically put the vendor. So let's say I only want to see Office Max's bills. And that's extremely useful for whenever I got one vendor in which I have multiple bills that I owe. Now I can just delete the vendor, filter up there, hit tab, and that will let me, that's strange. Let me just click on that and click all vendors. Actually, I have to click on all vendors and that will show me all the available bills. So I'm going to pick, go ahead and pick which vendors I want to pay. And I want you to pay particular attention to my bank balance. So right now I got $44,000 in the bank. If I start selecting any of these, like I'll select Office Max, that's $29,000. Notice that my bank balance goes down. And that's basically letting you know, hey, if you pay this bill, your bank balance is going to go down. And if I pick any of these, that makes my balance go down to negative. It will say you, it will tell you, it won't warn you. So I'm going to say warning, you're going to go negative. It's just going to show you. And at that point, you're going to choose whether or not you want to pay that bill because you could essentially bounce that check. Now, there's a lot of confusion because a lot of people think that if you use a pay bill functionality in QuickBooks, that you're effectively actually paying the bill. So this is not paying the bill. This is not calling your bank or anything like that. This is a screen used for me to print the check. And if I don't print checks, if I write checks by hand, then I want to make sure that if I write a check by hand, that I'm also recording it in QuickBooks so I know that that payable is being paid off. Or maybe my vendor drafts money from my bank account directly. Or maybe I give them my credit card number and I pay. So there's different ways to pay your vendor, whether or not you're actually writing a paper check or giving them a credit card number or giving them authorization to draft from your bank account. You still have to mark them paid as they happen. So as soon as they take the money from your bank account or you write them a check, at that point you have to mark them paid. That way you're not thinking that you owe that money, and also that your financial statements are accurate, especially your bank balances. So let's say, for example, I'm gonna write Office Max a check by hand. So I'm gonna go ahead and put the date that I'm writing them the check by hand. Under method, I'm gonna click check, and then I'm gonna click on assign check number, and then I'll pick the bank account that I'm paying with. So I'm gonna go ahead and click on pay selected bills. And then if I'm writing a check by hand, I just take the check number from my physical checkbook that's in my hand. Now, let's say I'm paying them with a wire transfer. I still want to use the check feature because QuickBooks pretty much calls everything check. So I'm going to use the check feature, but then instead of putting a number, I'll just type wire there. So that's just kind of a neat little trick of differentiating between an actual check and a wire transfer. So however is it that you're paying, as long as you're paying from your bank, we're going to use the pay bills feature, and then we're going to select method check, and then click assign check number. And then I'm going to go ahead and hit OK. Let's say, for example, that I'm going to print the check. So if I got my check stock that I ordered through QuickBooks directly or through any of the check vendors on the internet, if I got my check stock and I put it on my printer, and let's say, for example, I'm going to send these two as checks that I'm going to print. So I select the two vendors that I want to pay, and then click on this little checkbox here that says to be printed. So when I click to be printed, again, I pick my right bank account, and then I click pay selected bills. And then it'll prompt me now to print them. So I can then just click on print checks. It will show me all the checks that haven't been printed yet. I'm going to take the actual check number from the check stock that I put in the printer. I'm going to actually read the check number from the top of the check. And obviously there's going to be checks under it if I'm doing multiple checks, and that's fine. And then I click OK, and then it'll prompt me to my print screen. So then I select my printer, whichever my printer may be, click on print. In this case, I'm using like a PDF printer just so you can see it. So I'm going to go ahead and just kind of show you what that looks like once it's printed. I'm just going to do a PDF print, but that would just send it to the printer. So real quick, I'm going to open it up and show you what that looks like. So now when I print the check, it looks like this. You don't actually see the check information in terms of like check number and that sort of thing, because that's on the printed check itself, bank account number. Remember, this is the printed portion that goes on the check. And just to kind of illustrate what that means, I'm just gonna go to Google here and just search QuickBooks check stock. Okay, something like that, or printable check stock or something like that. And then when you go to any of these websites that sell it, you can buy it from QuickBooks directly, or you can buy it from like this vendor here called Deluxe. And this is basically what it looks like. So that's what the check stock looks like. And that's why you only see the stuff that actually gets printed on it on that preview that I showed you right there. So that's kind of the process of paying bills in QuickBooks. Even if you're paying with the check, you're going to use the pay bills functionality. Now, another common question I get is, well, what if I'm paying with my credit card? Or what if my bank account is drafting the money automatically from my credit card? I do the same process. So I'm going to go to State Electric, like that bill, for example. Let's say I want to pay this one. And I'm going to click down here where it says method. And then I click credit card. So then I pick my credit card, whatever my credit card happens to be. Amex, Citi, credit card, whatever. I pick my credit card. And then I click pay selected bills. And that money will actually come out. That money that came out of my credit card is being recorded in QuickBooks. So again, this is not triggering any payment. This is for you recording a payment itself. Now, don't confuse debit card with credit card. So if they're taking the money out of the bank and they're using your debit card, you're still going to use the method called check, because it is just like a check or a wire transfer. It's money coming out of your checking account, not your credit card. So again, this check button is going to be used for wire transfer, bank debit, debit card transactions, bank draft, ACH, e-payment, electronic payment, any of whatever name they give, money coming out of your bank account, that's going to be check, whether it's a check or an electronic payment of some sort. And if it's an actual credit card account, we're going to pick credit card. So then to pay off that bill or show that bill paid out of that credit card, I'll go ahead and click on pay selected bills. And then I'll click on done. All right, so here comes a big question. What is write checks for, and why is it different than pay bills? That's a great issue that most QuickBooks users have, is trying to understand this whole dynamic of pay bills and write check. So as I mentioned earlier, QuickBooks calls everything that's money coming out of your bank a check, including a debit card transaction, a wire transfer, that sort of thing. But from the context of QuickBooks, the difference between pay bills and write check has to do with accounts payable. So when you create a bill, you create something called accounts payable. You're recognizing an expense today, but you're going to pay it later, or the money coming out of the bank account to be paid will be done in a different date. This allows me to have currently an expense that I haven't paid yet. Write check is a little bit different. And by the way, they look very similar. So when you're in the write check screen, that looks like this. And just to compare it with the enter bill screen, they look really, really, really similar. So that's a really important point to make sure that we are aware that they look very, very similar. I mean, they have one says bill really big on it to let you know, and they also use slightly different colors. But anyway, notice that when I go write a check or use the write check function, that it asks me which bank account the money is coming from. So it's actually asking me for my actual bank account that I'm paying this from. Where if I look at my enter bills window, see there's nowhere it asking me what bank account it is coming from. So obviously this one is not affecting my bank. A bill doesn't affect my bank, where obviously write check does. So write check is used to pay a vendor or pay a supplier, in which I don't want a difference between the day I know about the expenditure and the day that I actually pay it. Again, I don't want to have accounts payable. I don't want to track something that I owe, because I only want to track it the day I pay it. So that's up to you whether or not you want to track bills and accounts payable, track the bills you owe ahead of time before you pay them, or put everything in write check and then just pay it as the money comes out. Now you can have a hybrid. You can have certain vendors that you pay through checks and certain vendors that you pay through bills and pay bills. But you're going to have a lot of discipline. You're going to have a lot of discipline to make sure that you're sort of keeping track of which ones you enter bills for and which ones you write checks for. Anyway, so if I pay a vendor, or I pay a third party, or I pay someone with my bank, I'm going to be using the write check feature. Now, let's say, for example, this is not a check. This is a debit card that I use to pay a vendor. So let's say, for example, I went to a restaurant, whatever the restaurant's name may be. I'm going to create my restaurant here, and I pay with my debit card. I'm going to create a write check. Again, because QuickBooks calls everything check, and then I'll put that under its own category, and I put that in there, and that's going to reflect in my bank register. So write check could be used just for debit card transactions, or of course they could be used for checks. So let's say, for example, I'm going to pay, let's say, a subcontractor. Let's call him Jose, the subcontractor. So I'm going to pay a subcontractor that did some, let's say, some work in my office or whatever. I'm going to pay him straight from using write check, because I didn't enter a bill previously, which is totally okay. And then I'm going to put the actual check number. So I actually have to get the check number from my checkbook if I'm writing them a paper check, and put it in there, and then I'll put a category there. There we go. And then I would just hit save, and that would just save that check into the register. Now, let's say I'm printing the check, then I got a couple of choices. One is I can just click on print, and then I type in the check number there that I actually read from the pre-printed check stock that I ordered from my bank or from QuickBooks or from whatever check vendor there's out there. So I'm going to put that check in the printer, and then I'm going to read the check number and type it in there, and then hit OK, and that will take me to my print screen. So that's one way of doing it. Or what I can do is I can click on print later, so I can batch these. So let me show you how that would work. So I'm going to go to print later, hit save and new, and let's say I'm going to pay someone else. Let's say I'm going to pay Mary, another subcontractor that I have, and I'm going to put here $500, and let's say she's the same category, subcontractors, and I'm also going to mark her to be printed later. So again, you can print the checks on the fly, or you can record a check that you wrote by hand, or you can put print later to put them in a batch later on. So I'm going to click on save and close, and then let me just go ahead and close that. And then right here on the home page, there's a button that says print checks. You can also access print checks from the banking menu. You can also access print checks from the file menu. So I can go to file, print forms, checks. So whether I go through the file menu, it'll pop up the screen, or whether I go to the print checks button right there on the home page, it will take me to the screen. It's the same exact workflow. So again, the same thing. I'll put that my check stock in the printer, put the number all the way in the top, hit OK, and now I can print 2 checks at a time. So some people feel that they should only print checks on Fridays or Thursdays or whatever. So you can just prompt all these checks to be printed later. And you can do the same thing with paying bills. So when you go pay bills, as I mentioned earlier, you can also mark a bill here. When I pick on check, I can also mark a bill to be printed. So same way I can batch my regular checks, or I can also batch my bill payment checks. So I can do both. Now, just real quick, just to kind of show you what that looks like in the register, I'm going to go ahead and click on check register and go to my default bank account here, my Regions bank account, and hit OK. And then we're going to see all these transactions. And notice that I entered a bunch of debit card transactions before, and I actually wrote debit on it. Now, let me just right click on this and click on edit check. Again, this is not a check. It's confusing to a lot of people. This is I paid American Airlines with my debit card, and I wrote debit or left it blank or put a D or whatever makes sense to let the user know that when they're looking at the screen, this is not an actual check that we wrote to American Airlines. That's confusing to most people. They're like, I never write checks to these people. And that's kind of like one of the tricks of the trade. Just make sure you put a D or DB or debit or whatever to make sure that doesn't feel to the other user that they're actually looking at a check when it's not. Anyway, but the ones that I created just now, notice that I created this bill payment to HP and this bill payment to Office Max, and this says bill payment. That's called a bill payment check, but there's not enough space there. And then there's my Morton's debit card transaction that I had there. And if I scroll down, there's my subcontractors that I paid. So if I double click on any of these, it'll take me back into my check. Let me hit escape. But I'm going to double click on one of these bill payments because these are slightly different. When I double click on a bill payment, it looks just like a check, just like the other ones. However, in the bottom, I don't pick a category. Like I don't pick, office supplies, or I don't pick rent expense or whatever, or subcontractor. I don't pick it. Why? Because that category is actually driven by the bill itself. And the bill is marked paid through that bill payments window. So this screen is basically sort of a hybrid. And the top is telling you it's an actual check to Microsoft, but in the bottom is telling you that this is actually attached to a bill. And that comes full circle with the first concept that we talked about, which is the write checks feature is not the same thing as pay bills. Although you can use a check to pay a bill, it is important to separate the two, because the bill itself, you can track an accounts payable or something that you owe, recognize it today, shows up in today's financial statements. But then when you actually pay for it, let's say next month or next year, whatever happens to be, that's when the money comes out of the bank. That's enter bills, pay bills. But if you want to pay something immediately, or money just came out of your bank account that doesn't have a bill associated with it, then at that point we use write checks. This is section 7, working with banks. If you're following with the QuickBooks Missing Manual and you are on the 2016 version, for example, everything about banks is going to be on chapter 14. Now, you may be working with the 2015 or 2017, 2018, whatever version of the Missing Manual. You may want to check what chapter is all about banks and credit cards. So if you're following with the manual, that is the chapter to use as a reference. Anyway, so I'm in the homepage of QuickBooks desktop here. And one of the fastest ways to go straight into a bank register, it's to click on the check register icon right there on the homepage. So if I click on register, it's going to take me straight into pretty much the only bank account that I have. If I happen to have multiple bank accounts, it will go ahead and prompt me for which bank account I want to open. Let me just go ahead and show you that. So I'm going to create another bank account. Let's say, for example, I'll create a savings account real quick. And we'll call it here savings. And now that I have 2 bank accounts, the one checking and one savings, when I click on check register, it will actually ask me, okay, which bank account would you like to open? So that's pretty much the fastest way to get into the check register. Now, if you don't have the home screen open, you can also use a keyboard shortcut, and that would be Control R. R like register, easy. So Control R will give you the same exact window pop up where you choose which account you want to open. Now, there's registers for every single account in your balance sheet, except actually pretty much all of them. So some of them you cannot write stuff on, but most of them you can add or remove transactions straight into the register. Now, most commonly we work with check registers or credit card registers, dealing with banks or credit cards, but there are situations in which we may want to work with the register of another balance sheet account. Anyway, I got the register open, and it's also good to mention that in the banking menu, there's also a use register button. So there's basically 3 ways to access it through the home screen, Control R, and through the banking menu. Now, this screen is pretty easy to use. This is where you pretty much enter every single transaction that went through your bank that is not already there. Now, what do I mean by it's not already there? Right? So if I would have created an invoice, received a payment, and made a deposit, which we cover that process in other modules, that would show up there. So let me just show you while the register is on. If I were to create an invoice, and again, this is just to show you real quick what is the impact that the regular transactions have on a register. But if I were to create an invoice, let's say for $75, and I would save that, and then I would go into customers and click on receive payments, and I would receive that payment for $75. And then I would do the next step, which is make the deposit, and I would go into banking, make deposit, not transfer funds, banking, make deposit, and then finally take that entire workflow and put that into the bank and hit save and close. Then you essentially see that transaction come into the bank register. So other transactions that I don't necessarily put by hand in the register, like deposits coming from an invoice payment workflow, or bill payments coming from maybe a purchase order bill payment workflow, can affect the register as well. However, on this lesson, we want to kind of focus on just doing raw data entry straight into the register. So for example, let's say, for example, you're looking at your bank statement and you went to the bank and withdrew some money, right? So then how would we categorize that? Well, first of all, we're going to choose the date that the transaction happened. So this February 17th, whatever date it is. Under payee, well, let's say we just drew some cash and put it on the petty cash account. So I'm going to create a vendor just called cash because maybe I just went to the ATM and took the cash out, or went into the counter and took the cash out, whatever it happens to be, or maybe you were to check the cash and you cashed it. Doesn't really matter. So I take $200 out, and where does this go? Now, this doesn't go into a expense account called petty cash. We should never do that. if you're taking cash out of the bank and you're using that cash to make expenditures, that should actually be transferred to another bank account called petty cash. So I can actually create another bank account here on the fly, and I'm going to go ahead and create another bank account called petty cash, and I'm basically just doing a transfer from one bank account to the other. Again, petty cash is not a brick and mortar bank, but it is, from an accounting perspective, it's a bank because we're going to make actual cash expenditures and we're going to log those individually. Anyway, let's say I'm looking at my bank register and I went to put some gas, right? So I would come here where it says pay and then type the name of my vendor, whatever, BP, and then hit tab, and then QuickBooks will say, hey, if BP is not in your database, would you like to create him? And I'm going to go ahead and click quick add him as a vendor and hit OK. And then let's say that was $48.67. So I just put the amount there under the payment column, right? Because this is money coming out of the bank. And then the account would be like the category. So I could put that under automobile expense, right? If I happen to have a sub account under automobile expense called fuel or something like that, and I'm just going to create it here on the fly. So if I happen to have that, I would certainly encourage using those sub accounts if that's the purpose of it. Now in the memo, I could put gas for the vehicle, but in my opinion, that's just plain redundant, right? What's the purpose of you writing that this gas for the vehicle when it's pretty much obvious based on the vendor name, the amount, and the category? So only really use the memo category for things that you're supposed to track. So for example, let's say we also see a charge from a restaurant. Okay, so let's say the restaurant was Cheesecake Factory. Okay, and then I create my vendor there, and if it's not in my database, I have to add him as a vendor. And let's say that was $128.50. And then the category for this one would be meals and entertainment. And maybe memo is useful here because I'm supposed to record who I ate with, right? What business associate, quote unquote, I ate with, and what business did we discuss. So I can say, lunch with new prospects about New York project, whatever, right? So that stuff would be useful in the memo. Put stuff like that, stuff that maybe the IRS requires you to have. And then once I'm done, I can hit enter or click on record, and that saves the transaction over. Another example, let's say, for example, I went to Office Depot and it was at a different date. Let's say it was February 14. And I'm going to type here Office Depot. You don't have to do all uppercase. That's just kind of my thing to make it a little bit easier to read. So let's say we do Office Depot, and that was, let's say, exactly $80. And we're going to put that under office supplies. And then the memo in this case would just be ink for printer or something like that. That's fine. And then I press enter or tab, and that it would save that. Now, one key thing about the register, it confuses a lot of people, is that down here where it says sort by, if it's set up to sort by date, and I entered a transaction that was in the past or before the latest transaction, after I saved Office Depot, it looked like the transaction didn't save or disappeared, which is not true. Basically, what happened is it reordered itself because we told it to sort by date. Now, one of the really nice tricks behind doing massive amounts of data entry, and you don't want to go back and forth to double check to see if that's saved, is to change that from sort by to order entered, and then it will put it on the actual exact order date and time that you put in there, regardless of what actual transaction date you used. Now, in the register itself, we can also enter deposits. So let's say, for example, we received some interest from the bank for having cash. So under payee, I'm going to put here the name of the bank. So let's say, for example, this was Chase, who paid me interest, and put them as a vendor. And then on the deposit side, let's say they paid me $1.80 in interest. And then under account, I would actually have an interest income account. And if I don't have an interest income account, I should create it. So I'll create an interest income account and categorize that as other income, and then hit save and close. At the same time, I can have maybe the next day, Chase charge me a fee, a wire transfer fee or something like that. So let's say this is $25 and it's now going to be on the payment side because that's money coming out of my bank. And then I can categorize that as bank service charges. And then on the memo, if I want to, I can put wire fee, right? Whatever. Okay, so that's kind of how the check register works. I'm trying to mimic or duplicate exactly what's happening in my bank, transaction by transaction with my QuickBooks register, so I know check and double check that what's in my QuickBooks register, it's what's going to be on my bank, and that's going to be the process of reconciling, which we'll cover in a second. Okay. Now let me also talk about other things. Let's say, for example, I wanted to enter a check that I paid, and that was paid, let's say, February 2nd. So I can actually go back to February 2nd here, and I will put a check number. So let's say that's 1001. And that's really important that the register will always try to add a number. And because QuickBooks calls everything check, it calls debit card check, wire transfer check. It pretty much, if money comes out of your bank, QuickBooks will call it check. So because QuickBooks will call everything check, it's important not to use check numbers or any sort of number on a non-check transaction, because it'll make you think that you're looking at a check and it'll confuse you quite a bit. So you want to make sure that that number reference field is completely blank whenever you're dealing with debit cards, electronic transactions, and you only actually put a number there when you're dealing with checks themselves. So let's say, for example, that check was to Comcast, and I'll create it as a vendor, and let's say that's $180, and I'll put that under utilities, whatever category that may be, and then hit record. So yes, you can use it to write or to record checks that have already been paid. Now that being said, let me minimize this real quick. Let's say, for example, I happen to be in the home page, and then I see a big button that says write check. Okay, a big wide button there saying write check. Or I go to the banking menu and I see write check. Okay, or I can see a shortcut Control W. I can also hit on my keyboard Control W, and I'll open up the check window. And the reason why I say this is because we see the screen so often, and writing a check in this screen is the equivalent, is the exact same thing as creating the check from the register window. So I want to make sure that that's clear, that a check being written from the register window and a check being written from the screen is the exact same thing. Let's say, for example, I'm paying my landlord, and I write a check real quick. My landlord, and they say that's $1,500, and then I come down here and give it a category. So that's kind of what the purpose of doing the check is from here. So it just looks like a check. Now the difference between using this screen instead of using the register screen is that from here I can actually print the check. So I can go to print check. So if I'm using QuickBooks printable checks, I should definitely use it from the write check screen instead of from the register screen. But if I'm writing checks by hand and I'm recording historical checks, I can do one by one if I want to through here, or I can do it through my check register. So that being said, let me open up my check register again, and then we see that check entered here, coming straight into the register. Now, what about income from customers? Now, so let's say, for example, I have a customer that paid me $1,200. Should I come in here and select the customer's name and put $1,200 and then put some sort of income account here, and this is how I should record my income? So the short answer to that is maybe. If you are creating invoices, you should never, ever, ever, ever write any income straight into the register. You should follow the workflow. Create the invoice, receive the payment, make the deposit. Otherwise, you're going to cause a huge mess. QuickBooks doesn't really automatically mark an invoice paid if I actually enter deposits straight into the register. So that you want to be very, very careful about entering deposits straight in the register. Now, if you got a refund that you pay with a debit card, yeah, do that through the register. That makes sense. If you get interest income like we booked here earlier, that makes sense. If you get rewards from your bank for whatever, it makes sense to do that, but not a customer payment. Customer payments should follow that entire workflow. So that's really, really important because that's an area of confusion to a lot of first QuickBooks users. Now, let me make an exception to the rule is if you're, let's say, an accountant entering backlog, 10 months, 12 months, 2 years worth of data, and you're not really creating invoices in QuickBooks, or maybe you're a QuickBooks user that just doesn't use invoices at all, then that's fine. Now you can enter all your deposits as income, sales, whatever, that's fine. Just be careful if you're going to be using invoices, you got to use the full workflow, okay? Let me go ahead and hit record here and close it. So one of the common questions we get at this point is, okay, so we wrote a check and we entered debit card transactions straight into the register. What about bill payments? So if you had a bill, so I'll just create a bill real quick here. Then you're going to enter bills, and let's say I have a bill from Comcast, and we'll make that Comcast bill, say $378, and we'll go ahead and close and save that. So if I happen to have a bill and I go into my register, banking register. If I go into my register, that bill for $378 is not going to show up anywhere here. Why? Because that bill is creating an accounts payable, something I'm going to pay in the future. Yes, it's an expense, but money is not coming out of my bank yet. So if I go pay that bill, some people, what they do is they actually, let's say they're going to pay it with a check. They'll go into, let's say, the home screen and they'll click on write check. Now, the problem with that is when you actually start writing a check to Comcast, you're going to get a pop-up saying, hey, you shouldn't do this. You shouldn't write a check because there's an open bill. And doing this is going to potentially duplicate your accounts payable. Most QuickBooks users say, yeah, whatever. And they hit OK and they just move forward and they create a mess. So pay attention to that particular sign. So that being said, you can pay a bill that affects your register the way it's supposed to, but you also need to mark that bill paid. So to kill two birds with one stone, mark the bill paid and also mark the payment coming out of the bank. We use this icon here called bill payment. Pay bills, bill payment, whatever. But it's different than the write check feature because the write check feature is supposed to record an expense that I'm recording today, that I know about it today, and the money's coming out of my bank today. And there's no time difference between the moment I know I have to pay it and the moment I actually paid it. It all happens simultaneously. That's what write check is for. Even if I'm not actually writing and printing a check, like I mentioned earlier, I'm doing a debit card transaction or electronic transaction of some sort. However, if I created this Comcast bill 10 days ago, 20 days ago, and then I'm paying it later, I must follow that two-step process. Enter bill, pay bill. Now, when I go pay the bill right now, it's going to ask me which bank account should this bill be paid from, and it could be from a check, or what QuickBooks calls check, or a credit card. So if I'm paying with a bank, whether I'm paying an ACH, an actual physical check, an electronic transaction of some sort, maybe with my debit card, I will use that transaction type called check inside of that pay bills window. So let's say, for example, I paid it online, so I'm not going to print the check. I'm going to click on assign check number. Again, a little bit counterintuitive, but I'm going to click assign check number and then hit pay selected bills. And then when it's asking me for an actual check number, I'll just put here online, right? Online or ACH or E for electronic or whatever, right? So that way I know that I use the pay bills feature. QuickBooks will make it look like a check because, again, QuickBooks calls everything coming out of your bank check, but this will follow the right process and mark the bill paid and also affect your register how it's supposed to. And you certainly see that 378 right there affecting your bank. Now, finally, after you enter all the transactions in the register, all your deposits are there, all your checks are there, all the expenditures are there, you want to reconcile. That's kind of like the last step. So to reconcile, we go into banking and we click on reconcile. And then we select the bank account that we're going to reconcile. And then let's say we're physically looking at, let's say, the bank statement that ends on February. And then I actually have, let's say, the statement in front of me. So I have the actual physical statement in front of me. and let's say the ending balance of that month is 9594.68, let's say, for example. Okay, and then what you're supposed to do is take all of your deposits and all your expenditures that actually have cleared the bank, and you basically mark them one by one. And the exercise should be, mark one in the paper, mark one in QuickBooks, mark one in the paper, mark one in QuickBooks, and just go back and forth until your difference is 0. So once you are done marking them all on the paper and also marking them all on the screen here, at that point you should be a difference of 0. So let's say, for example, I'm looking at my bank statement, and let's say I'm short, whatever, right, $821. And let's say, for example, I'm looking at my statement and I actually have a missing check for that amount. So I just have to go back. I don't have to do anything fancy here. I just go into banking, write check, and I finish entering that missing transaction that happened to be in my books. And let's say I paid Microsoft $821.95 for, let's say, software for the office. So I'm going to put that into office supplies for now. So let's say, for example, that's it. That was the missing transaction, and it happened to be a check 1003. So as I add any missing transactions that I may have, and it looks like these 2 checks here in the top were not in my bank statement, so they can stay there. That's fine, because we are thinking that maybe on the next month, in March or whatever, those checks will clear. Now you have to be careful, because those checks really shouldn't be there forever. There should be a point in time until those checks are no longer valid, but that's a whole nother issue which we'll deal in another lesson altogether. But the point is that all my deposits and all my expenditures, whether they're checks, bill payments, wire transfer, ACH, electronic, whatever happens to be, those should all match my bank statement with my QuickBooks. And then finally, once I'm 100% matching, I should be at a difference of 0. And then I'm going to click on reconcile now. And that is that last step to just make sure that my QuickBooks is complete, that everything that happened through the bank, it's in QuickBooks. And then I can click on display and look at the report. So I got this summary report that shows my beginning balance, my cleared balance, total deposits and checks, and then everything that didn't clear. And then if I hit escape, I would have the detailed report right below that. And it'll be the same report, just with transaction level detail, including those 2 transactions that didn't clear. So this report becomes really, really valuable to just check and double check what is it that we were doing, that it matches the bank. And then the only thing that doesn't match the bank are the things that are outstanding, that are hopefully going to happen on the next month. So that's lesson 7. The next lesson would be about basic reports. Section 8, Introduction to Financial Reports. If you're following with the QuickBooks Missing Manual, for example, the 2016 Missing Manual, this would be Chapter 23, or at least Chapter 23 is the one that has the most information about all sorts of reports, including standard financial statements and all sorts of custom reports inside of QuickBooks. Let's go into QuickBooks here, and let's talk about the different reports that we have. So by default, the report that most people look for at the end of any cycle or at the end of the week, month, day, whatever, is the profit and loss. So that's going to be in the reports menu under company financial, and then profit and loss standard. So when you open the profit and loss, you should be able to see all of the income and expenses related to that period. And the period will be based on, here it says dates. You can select periods like today, or this week, or this year, or this month, or last year, etc. Or you can manually choose the date range that you want for that period. So you're not stuck with the options that are here, although the options in the drop down are quite extensive. Now you can also click here where it says sort in the top right, and then I can sort it by total, and then maybe get all the expensive stuff to be in the top, and then all the not so expensive lines all the way in the bottom. So I can actually sort this by total, or click on default, and then it does the regular alphabetical ordering of the accounts. I like to do total descending order. That way I kind of see the biggest expenses in the top. So that's the profit and loss report that shows pretty much all the sales, expenses, all broken down based on the accounts that are in your chart of accounts. Again, your chart of accounts is on the list menu, chart of accounts, and those are the accounts that are here. And just to provide some context here, let me put these two screens next to each other. So I'm going to click on the window menu and go to tile vertically. So in your chart of accounts, you're going to see all these accounts are carrying balances that have basically a number or a balance next to them. This is what you call balance sheet accounts. And none of these balance sheet accounts will show up in my profit and loss report. My profit and loss report is only going to contain income statement accounts or profit and loss accounts, which are these income, cost of goods sold, expenses, etc. So whatever I have in my chart of accounts is the only thing that can show up in my profit and loss. But moreover, it's the actual transactions that we have used that are affecting those accounts that are going to show up, because I actually have a lot more expense categories that are not showing in this profit and loss. And the reason for that is because they're not being used. I mean, you could actually click on Customize Report and then click on Advance and force all of the accounts to show up by clicking on all rows and then hit OK and then OK. And then you're going to get your full financial statement with all your income categories, all your expense categories, even the ones that have no activity or zero. So it'll be up to you whether you want to show that zero or hide it. By default in QuickBooks, you don't have to do anything. It only shows you the active accounts, which are the ones that had activity inside of them, and consequently the ones that would actually have some sort of balance to show up in the report. So that's the profit and loss report based on those accounts. Now, as I mentioned to you, the first set of accounts that are carrying balances belong to the balance sheet. So let me go ahead and close that profit and loss and pull up a balance sheet. I'm going to click on Reports, Company Financial Balance Sheet Standard. And then I'll also put these next to each other so we can see here. So notice that I got my chart of accounts here on the right side, and I got 1, 2, 3 accounts with running balances. This is about the same thing you're going to see in your balance sheet. As long as you got a balance in my running balance accounts, something will show up in my balance sheet. So if I were to create, for example, a new asset in my chart of accounts, let's say I had a vehicle from last year that I forgot to put in the books, and I'm going to go ahead and put it there. I'll put it here, Toyota truck, and I'll put it with a beginning balance of some sort. So let's say, for example, this was worth $28,000, and I'll put here the date the original date that it was purchased. So let's say, for example, it was purchased the 4th of 2014, and I hit OK, and then save and close. And now you should notice that immediately you're going to see a new asset show up in the balance sheet. And that's the purpose of the balance sheet. It's there to track what we own, which are the assets, what we owe, which are the liabilities, and the difference, which is the equity. So those are the two reports that we manage the most. And yes, I could put them next to each other. I would just pull the balance sheet, pull the profit and loss, close everything else, and tile vertically, and I can actually see them one sitting next to each other. Now, these two reports are linked on the net income. So for example, if you look at my profit and loss for the same period as my balance sheet, we're going to see a running net income of 1960 loss here, and you see that pass through the balance sheet. So these two reports are attached at net income because that's the one thing that they have in common. So technically, the balance sheet is a much more complete report than the profit and loss because it actually contains the summary result of the profit and loss together with a lot more information. So I am strongly for reading the balance sheet or getting the balance sheet before the profit and loss. Typically, you get a lot more information from it. Now, most people are just pretty much obsessed with the profit and loss because that's what they understand, because that's, that basically represents the performance of the company. It represents how well sales were and how good we were in controlling costs. And this is the stuff that goes in the tax return, and your net income from your profit and loss is typically close to your taxable income. So that's what most people are obsessed about, looking at the profit and loss, and they miss some pretty big opportunities on the balance sheet, because that gives you a lot better information. Now, there's another financial report called the statement of cash flows, which is in the company financial section as well, and it's called statement of cash flows. And I'll also put that, I guess I'll put all three next to each other, and you can actually see all the reports here. And the statement of cash flow basically shows you if there's a difference between bank and profit. So if your bank and your profit have different numbers, it will explain to you what the difference is. Like, so for example, if I were to create an invoice, let's say for $5,000, and I'll do that real quick, and I'm going to put here today's date, and I'll pick whatever item, and I'll put $5,000. What's going to end up happening is the profit from a profit and loss now is going to shoot up. Right now I have an extra $5,000, and maybe I have a positive number at the end. When I look at my balance sheet and I refresh it, now I see a new account called accounts receivable, which is the account in which we track what customers owe us. And then when we go to our statement of cash flows on the left side, notice that these $5,000 are not cash in your pocket, just letting you know that, why is there a difference between the actual money in the bank and the actual profit showing in my profit and loss report. Now let me close the statement of cash flows real quick and rearrange these two screens, because another really important topic to cover on financial reports is the concept of cash basis and accrual basis. So you notice that I put that invoice for $5,000, but I haven't received the payment yet. And let's say also I'm going to put a bill from a vendor, let's say from Microsoft, and there was a bill, let's say for $3,500, and we're going to put this into maybe cost of goods sold of some sort. And I also haven't paid that bill yet. So I got my invoice for $5,000 and my bill, my payable for $3,500. And notice that now it's showing a net income of negative $460. Let's do one more invoice here, and I'll go ahead and create an invoice. This time around, I'm going to partially pay it, because it's kind of interesting to see partial payment. So I'm going to make this $2,000, and then I'm going to go ahead and receive a partial payment for this invoice, so you can kind of see how this whole cash basis, accrual basis behaves. So I'm going to go ahead and receive, let's say, half of that $1,000, and I'll apply it to any of the invoices. It really doesn't matter which one you do, but just to be consistent, let me do it to the $2,000 invoice by hitting the little checkbox to tell you what invoice I want to apply. So here in my profit and loss report, which says that it's an accrual basis report, it shows me a profit of $1,539, and it's showing me the full $5,000 from the invoice that I created, the full $2,000 from the other invoice, and the full $3,500 from that bill that I haven't paid yet. Now, the accrual basis report shows all income and expenses, including what is outstanding. Balance sheet, the same thing. Accrual basis will show me my accounts receivable and my accounts payable, which is my open invoices, the receivables, and open bills, the payables. It will show me that because it's an accrual basis report. The only way I can hide outstanding receivables and outstanding payables is to switch the reports by clicking on Customize Report top left, switching it from accrual to cash. So cash is called the accounting method, and basically the way cash works is it only includes received payments and made payments. Therefore, if I got an open invoice or an open bill, it won't include that, and therefore it's going to give me a different number altogether in my net income. So notice that before, if I would have gotten payments for both of those invoices and even paid that payable, I would have been on positive $1,500. But because I'm in cash basis, it's negative $960. So I'm going to switch it back to accrual just so you can see. And now it's a positive number. Now, you got to be very careful that you're not looking at maybe an accrual basis profit and loss and a cash basis balance sheet, because then these two net incomes are not going to tie together. Really, really important. So if you're going to look at them in cash, look at them both in cash. If you're going to look at them in accrual, you got to look at both of them in accrual. And most importantly, you should always look at the profit and loss on the balance sheet together. You shouldn't look at them separately, because one has half the information that the other one has, and vice versa. So those are the basic financial reports in QuickBooks. Now, on the first lesson of day 2, we go into custom reports, or at least in-depth report creation and a little bit of customization. So we'll be able to dig a lot deeper into the analysis of reports. But for now, this lesson is all about just introduction to reports.
And that's it. You watched the entire 4-hour video. Let me give you a round of applause. I really, really hope that you drew tons of value from this QuickBooks Desktop Basics course. Go in the description and check out the links for the full training programs that we have, especially the manufacturing, inventory, wholesaler series, because that's the flagship course that I teach. So if you want to get deeper into that, if you want to learn way beyond what you learned today, go ahead and check out this course. Make sure you hit a like, go to the comments, subscribe to the channel if you found value from this video. Thank you, and I'll see you on the next one.